this whole thing and I got slides for you guys. So for those who feel informed, you know what I mean. You have to scroll all the way and then you see your friend, the young person beside you, finish filling up the form already. Okay, so good morning everybody. Thanks for coming and joining me this like birthday weekend where I want to really share strategies. Okay, and the reason why I want to share strategies, right, is because I believe the stock market, the financial markets is a place for everyone to become wealthy. Can you all please type me? Me as in to become wealthy in the market. If you know how to do it, because the market is created for wealth. They don't create the market to do charity, right? They created the market to make people rich. So it is who decides to be on the rich side and who decides to be on the side that contributes to the rich. Okay, so I've contributed to the rich for quite early parts of my years, and after that I became very inspired because I do know for sure that a lot of people also became rich. Oh yeah, okay. So quick shout out. There's no obligation, but at the end of the workshop, at the end, if you all feel like, oh, this is something that you have benefited and you believe, okay, I can really make money out of this. I also want to contribute to people who are less fortunate than us. Okay, so for us, we went to this place, Classroom of Hope. That time was in Indonesia, Lombok, to really help children who doesn't even have schools. So for them, they don't even have education enough to enter the market. For us, we are quite lucky already, I would say. Okay, so remember to count our blessings, and at the end, then we talk about this. Okay, so today the topic is precision profit 2080, 80-20. Can you all please tell me type 80-20? Okay, so we're going to talk about 20 strategies. I am aiming not to rush. Some of them, it is a variation or a short strategy, meaning to say some of the strategies is long, some of the strategies is short. Either the market goes up, the market goes down. That's where some of them is opposite. Then I will not go too much into the opposite portion because the rules and the setup is about the same. Now, the platform that I'll be using to demonstrate, right, is called MT5. The reason why I'm using MT5, right, is because there is a very powerful system that can allow us to backtest. It's very, very powerful, okay? Wait, let me just make sure everyone is in, okay? So this particular system, right, and it's free also. You can also use this system for free. So let me just give you guys the link. You can download this. You can download for Mac, can download for Windows. It's entirely free, okay? Then you can do paper testing, paper trading and things like that. Let me just send you guys this link first. You all can just click on it, then later you all can download. Don't download now because as I'm sharing, you all may miss out certain things. And at the end of everything, okay, at the end I'll share with you all guys how to get all these notes because I got specific like strategy, specific setup for everybody. Okay, Ken? So in case you are very, very new to this, can you all please help me share like what is your wait your type, you all got click on the link, click on the link already. Can you all help me share with me, right? What is your experience in the market? And okay, what's the experience? How many years? How many years? How many months? If it's years, you all just type the number. If it's months, you all type 0 point something years. Okay, can? I want to know your experience so that I know. Can I go a bit deeper? Can I go a bit slower? Okay, 1 to 2 years, 0.4. Oh, still contributing to the rich. Okay, it is a tuition fee tuition fee. All of us, we go through that. I don't know anybody who started investing, trading, then immediately make a lot of money. Seldom. Usually have to pay a bit of a tuition fee. Either you pay to the market, you pay to your, or maybe pay to some of my training that you all sign up for. It will speed up the process. Okay, so the purpose of today is to build wealth and give wealth. How many of you love this idea? Wow, you build wealth, very wealthy. Money is not even a concern to you anymore. All you think about is how to use your energy, your purpose to go and help everybody. How many of you love that? You love that, right? Okay, so for those who got later inquiry emails and all that, because of like setting up of brokerage, later I will answer some of this, okay? So if any of my team members here, you can also put our inquiry email. Hey, wait, I must check because got some imposters and scammers out there, right? Sometimes you don't know whether they ask you to click on certain things. Okay, Ken? So this is the idea. Later that we talk about it, but it's very amazing. When we go and visit them, we realize that we are really very, very lucky, really. Very, very lucky. Okay, Ken? So, okay. So I want to share with you all a few things. 3 important rules to build our pot. POT. Can you all please type POT? Okay, POT. So these are the 3 very, very important rules because as I share the strategies, right? I want to be very, very upfront with you. These strategies are high probability, means high chance of winning. High chance of winning doesn't mean sure confirm win. No 100%. There's no 100% guarantee strategy one. If there is a 100% guarantee strategy, which there is in the options world, the liquidity is very low. Meaning to say there will be some smart institution out there that will snatch up and then it's very hard to get in. We have seen sure win strategy also, like box trade and things like that, but so hard to get in. So it's all high probability. Can we please type 80%? Oh, no, sorry. can you all please type 20%? 20%. Means that 20% of the time you will lose one. Okay, sometimes maybe, and the 20% of the time that you lose, right? I want to share I want to share this upfront first. Otherwise, you're like first trade you enter, you lose, you suddenly feel like jumping off the window. Don't do that, don't do that. Okay, unless you're the first story window, you want to practice your obstacle course, no problem. But don't need to do that one. It is part and parcel of the game to win and lose. Just like the casino, every person who goes into the casino and gamble against the casino, some of them will win, correct? The casino won't cry because one person pull the jackpot and suddenly win money. It is part of the plan, part of the plan. So can you all please type PLAN, plan? You must have a plan. And today we have 20 plans. And I'll share with you why 20 of them. Why 20? Okay. So, okay, the first rule is this position size. Okay, so I want your, just for simplicity's sake, make it simple, right? Just type 2%. 2%. So this is the most important thing before I go into strategy. Y'all cannot remember everything. Remember, every time you enter a trade using any system, you must calculate worst case scenario. If you lose, maximum you lose 2%. Okay, that's the thing. Okay, cannot remember anything. Remember this. I can almost assure you that if you keep to this 2% rule, means that every time you lose 2%. Or Meta 5. Actually, you all can also go to Google and then search for MetaTrader 5. Okay, typically you will come to this website. Okay, let me post to you guys. Okay, now let me explain to you. If you every time you lose 2%, right? How many times must you lose to finish up losing everything? Can you tell me? So smart, 50. Is it 50? Answer is not 50. It's actually unlimited. You know what or not? Initially, let's say you got $100. You lose, you bet and you lose $2, right? Then becomes $98. $98, the next bet you bet, right? Or the next trade you go in, is not $2 already. It's 2% of the $98. So can you see, if you keep sticking to the rules of 2%, right? Typically speaking, generally speaking, it's unlimited. If you can keep going in the market and keep practicing until unlimited times, right? Eventually, you will start to understand and you'll start to win. Does it make sense or not? Okay, market move up or down by 2%. Later, we'll go into some more details. But remember these 2% rules. This is the most important rule. For how many of you are investors, traders, and you know that this and what I say, you all can attest to it. And you have experience, you attest to it. Can you all please type Y? Y for yes. If you don't know anything yet, don't type anything. So you can see a lot of people who have experience, they know what I'm talking about already. If you can protect your downside, protect your capital, you will eventually find out enough on how to make money on. Okay, can Now, second portion things is POT. First is position size. Second is optimize and backtest. Whatever system that I share with you, you must backtest and then optimize. Optimize and backtest. What does it mean? Later I share with you all some systems, right? Certain setup and certain entry and exit, right? Okay, you can go and see for yourself. There are, because maybe let's say I like to trade S&P 500. For you, you may be a commodity traders, okay? Because maybe you don't like to 9:30 then wake up and do because Forex, gold, or even crypto, actually lunchtime nothing to do, you can go and trade, okay? But for me, I don't really do that much. I use auto trading, okay? So you must go and back test and see, if it works on S&P 500, can it works on gold? You must definitely test. So optimize and back test, okay? Can you all please type OBT, optimize and back test? Okay, how to optimize? You must go and say, if I use this system, the variables that Sean teach me, right? Can I change here? Can I change that? You must take it as a way to experiment. You cannot say, this system confirm 100% guarantee. It is high probability. We have been making money already, okay? Quite good money. But the thing is, when you go and optimize and backtest, you suddenly find a system that suits you, because your eyeball and my eyeball are a bit different one. Some people see uptrend and some people see downtrend, different one. Any of you experience this or not? How come we use the same system but got different results? If you experience this before, type 1. Very funny one, And you know what's happening? It's because, right, our ability to absorb the information, we all see things differently. Just like I look at myself in the mirror, wow, so handsome. But some of you see already, you all say, it's not so handsome, it's like super handsome. So it's like we have different ways of looking at things. So when we look at the but system is system, right? But somehow when you optimize, it becomes your own personal system, right? I tell you, it becomes a lot more powerful. Okay, so optimize backtest. Finally, right, I want you guys to trade live. Okay, how come got people laugh? Who is this, Felicia? No, just okay. David also, your blacklist already. Okay, so the trade live portion, right? By the way, all this looking handsome joke, right? If you're already handsome, you don't make this kind of jokes. People will be angry. So it's this kind of face, you can say this kind of jokes. Okay, last portion is trade life. I tell you why I say that. Because just this year only. I actually met some friends whom started trading together with me and investing together with me, right? Almost near 20 years ago. And some of them, right, I asked them, how is everything? He said, I already mastered this particular system. And then I said, so what's your ROI? Because he's still working at his place. He told me he wanted to quit his job. And he's still there lah. So I said, then I mean, if you're successful already, why are you still in the place that you say you don't like? Then he said, oh, I just do paper trade only lah. Paper trade means demo money, and he do that for 10 over years, you know. So I look at him, I blink. I say, hey, why ah? It's because the first time he never go and optimize, he never position size. He use real money, he lose money. After he lose money, he's scared. It's just like someone, he go and swim in the sea, jump inside there, choke on water, then got scared. So from now on, they only do simulated swimming, just at home, dry swimming, maybe play mahjong lah. Okay, so but trade live and then trade small first and increase bit by bit. There's nothing like trading live. When you trade live or you invest with real money, you will realize it's not just a system but also yourself. Okay, so it's very important to trade live. So POT, does it make sense or not? Make sense? How many type POT? Okay, so this is something I will remind you again and again, because as my age increases, 43, 44, 45, you'll realize I'll repeat a lot more times. You'll realize or not? Because people who are older, they are wiser also. They know that important things must repeat a lot of times. Sometimes they also forget, hey, did I say or not? So repeat a few times. Okay, come. Without further ado, let me go straight into it. Hey, someone is drawing on my... Wait, I can make sure that y'all don't draw on, right? Wait, never mind. Okay, so I want to share with you all simple strategy. Then we go into a little bit more, I would say, advanced bit by bit. Can see y'all? Okay. Wait. Okay, so I will show you guys how to do the setup, and then certain portions I also will record for you guys. Okay, don't worry. Position size tell us how much money we should place out of the fund ready to... Is there a rule to decide how much overall available fund to be placed in the market? Okay, this is a very good question. It's a very good question. So in fact, right, I would say that depending on your particular fund size, if your fund size is very small, right, there's nothing much to position that much. Okay. The reason why I also like to use MT5, because I realize there's an advantage. Now, because in the stock market, right, I ask people to buy S&P 500. I never ask people to buy anything. I shouldn't ask you to buy anything. I just share with you my perspective. So I say, hey, wow, this stock very good, Apple very good, Amazon very good. Then I realized that it takes quite a bit of capital from other people. Okay, from especially if you have a smaller fund size. But using MT4, they are using this thing called CFD. It's called contract for differences. Contract for differences, I want to share with you guys. Can you please type CFD? So I want to make sure that I share this as complete, as accurate as possible. CFD, is a leverage tool. So example, let's say $500, right? You got $500, maybe you can buy one S&P 500 shares. But if you use CFD, right, with $500, you can buy 50. You can buy 50 S&P 500 shares. Because S&P 500 in the CFD, you just need to use $10 can buy already, okay? Because there's a certain leverage too. When there's leverage, I also want to share something. When there's leverage, they allow you to leverage, there's also interest rates, okay? So all these things that I'm sharing with you today for this segment using MetaTrader, it is shorter term. Shorter term, right, is within months. Okay, so maybe 3 months, maximum 3 months, you should get out of the trade already. Okay, so I'll be sharing with you. And most of the things I share with you, all, you usually maybe 1-2 weeks already get out already. You start to see money already. So far clear. You can use, okay, I prefer to use computer lah, because I give, okay, later that I share with you. You can use whatever system that you want. Use as long as it fits you lah. I show you first. Okay, come. Without further ado, let me show you. Once you download MT5, okay, especially if you're very new, once you download Mac or download Windows, it should look like this one. It should look like this. Okay, so you see, these are the stocks that you want to buy or sell already, and these are the instruments. Instruments means like Forex, gold and things like that. I'll be going to some of them. One more reason is this. One more reason I'm happy that you guys are here, because now earnings season in the stock market. For me, my main way of making money is through stocks and options. That one I'm very comfortable, because I feel that using options all this, I have a lot of advantage, okay? But now earnings seasons is crazy. So I say, spend some time, you can do some other things that's ranging, sideways, or like it can go directional, okay, directional. So once you're here, okay, I suggest you all just focus on a few things, okay? Okay, so in MT5, it's called US 500. US 500 is S&P 500. Okay, US 500. You can take a screenshot. US 500. I suggest you can take a look at gold. Okay, gold, I realize, is something that's extremely volatile, and quite a number of the strategies can use quite well. It does very well, okay? And then you can do foreign trading pair. Okay, so foreign trading pair like Euro USD and Japan USD Japan. Okay, so this one. So you go inside there, example, you type Japan. I'm typing Japan. Okay, JAP, Japan. You see I type Japan. Sorry, JP. Okay, all this Japan pair will come on. Japan versus you and all that. You just click on it, you'll be here already. Okay. So now the reason why for some of the beginners, right, especially if you want to focus on trading systems, all this is useful. There's no valuation. So you don't have to go through valuation like what I do, which I like a lot. I know a lot of people don't really like. The next portion is this. For Forex and for gold, right? The thing won't go to zero lah. So S&P 500, Forex, gold, Bitcoin, I can't attest to it, but I think won't go to zero. So unlike certain stocks, it may go all the way now, become zero. So all this a little bit safer in that sense. Okay, can So this is how it looks like. Okay, now let's go through our first system already. So our first system, oh, by the way, all this system, I tell you, it has been used and proven by quite a lot of people already. Okay, there's people who like make how much is it? 2 million in 18 months. Okay, from 36,000 to 2 million in 18 months. I'll be touching one of his system. He's called Nicholas Nicholas Davas. Okay, there's also the total trading system. They make 175 million in 5 years. Okay, all these are tested and proven that they can you do it, and it is system based. Meaning to say people who use the same system typically can get the same results if you really do your POT. Can you all please type POT? Okay, POT. Okay, so okay, MT5, all this, right? Later I share with you all that I'm inviting some full-time traders and all that to even guide us through, and they are saying that they will even give us the template. Okay, so I'll share with you all some of the trainings later. Okay, so it will be a gift for all of us here. Okay, so okay, come. This is the MT5. So example, let me go to my chart first. My PowerPoint slides. Okay, so you can see my PowerPoint slides, right? The first one is called Golden Cross. This one can be used, okay, you can see the time frame, okay, 4 hours or daily lah. Okay, 4 hours or daily, what does it mean? And then the various currency pair, stocks, commodities, that can be used for almost anything. Certain strategies is more suitable for certain things lah. Okay, so let me see the example that I use. Okay, example, I use S&P 500 Okay, all these slides you all will get, so don't worry about it. S&P 500 on the left side here, I just right click, okay, and I click on chart window. Now when I click on chart window, right, you'll see it's black and green. Okay, for me, I prefer the white color one. Okay, so how to change it? You'll see it's quite simple. I'll do it a few times by the end of today, and the recording, everything, I'll give you access to it, so don't worry about it. Okay, so the charts here, go to properties. I would like to change it color on white. Okay, a lot easier for my eyes lah. Because for me, I'm still young. My eyes like to see white and snow color. Okay, can So this is how it looks like. Okay, so how to set up, right? You can see the indicators I need is 20, 50, 200, and ATR. Okay, these are the things. So when you all look at this particular summary sheet, you will see these are the indicators that we need to use. So let's pull out these indicators first. Then we talk about the prerequisite. Okay, so this one is one of the simplest, but it's very, very effective. Okay, when I backtested this, at the end I show you guys this. I backtested this, this one can have a 80 to 90% win rate. And then the drawdown is also very little. So meaning to say if you lose, you also lose very little. You win a lot. Okay, so we talk about, first one is called moving average, SMA. Okay, can you all please type SMA? SMA is moving average, one of the indicators that a lot of people use. Now, a lot of people use, then why should we use? Because a lot of people use, that's why we should use. Okay, some of the things, right, you want to use what people use so that you know what everybody is doing, then you can follow the whole entire trend, especially for institutions. Okay, so look at my mouse. We go to insert, go to indicators. Wait, insert indicators, go to trend. Here got moving average, but because I use it, that's why it's here. Okay, insert indicators, trend, and then sorry, some people still coming into the room. When you come into the room, I cannot. Trend. Wait for. Okay. Insert indicator trend. I didn't never practice this way. Okay, so click on moving average. You see, moving average. Now we need a few 200. 200 is a very long one. It tells you the big broad trend. Okay. Later I set up a few more things. Insert, same thing. So we go do it a few more times. Insert, and then trend, then moving average. Then next one is 50. Okay, this one is the very typical one. But later I tell you guys we need to POT, right? Optimize, always optimize, right? The things may change. Okay, 20. I should change a different color. This one maybe I put blue color. Okay, blue color. Okay, and then this one I change to red color. Okay, so I have different color. You can even put thicker, make it thicker a little bit. if you cannot see. But for me, I got perfect eyesight because I'm very, very young. Okay. So, okay. But I just give you an example. You can do that. Do that. Okay. So now, what's going to happen is this. This is for the moving average. Now, a few more things that time frame. Can you see 4 hours or daily? Okay, if you want to become a little bit fast paced, like you want to get results faster doesn't mean bigger results. Results faster means you get your like you take exam straight away, they give you the results. They'll tell you whether you pass or fail. Okay. So result faster doesn't mean it's always better. But at least maybe different preference. Different preference. Maybe you want to gain experience faster. Correct. So okay. So let me make it a bit thicker also. Okay, for this one. Okay. So okay, you all can see this is the moving average. Let me do one more indicator. Can you see ATR? ATR. ATR stands for average true range. They will calculate the past few what do you call it? The past few average true range. The past 14 days now. So the period is 14. You all can see ATR 14. The past 14 days, how much these stocks fluctuate, and then it'll become a range. Okay, it'll become a range. So you can see this is the setup. Now, a few more things to set up before we go into the strategy is this. You all see the time frame is 4 hours to daily. Okay, give me a moment. My dog barking. Okay, so when it's 4 hours or daily, right? How to adjust this? Okay, so for those who are very, very new, you will see that here the chart is actually very simple Here, can you see M1 is not the telco. M1 is actually 1 minute, 5 minutes, 15 minutes. So when I click 1 minute, right, it means that every single candle that we see, right, is 1 minute. If I click M5, is 5 minutes, 15 minutes, 30 minutes. Okay, we focus on 4 hours and daily. Okay, 4 hours and daily. So the example that I use, okay, is daily. Okay, so can see so I click 1 day. 1 day means that every day, okay, this one chart is actually this one bar is actually 1 day. So 1 day, 2 day, 3 day, 4 day. So you see like that, right? Maybe got 20, 30, 40. It's like it's almost 1 year already. Okay, got it. So okay, this particular setup is useful for 4 hours and daily. You know? EA later then I talk about it. Okay, EA is expert advisor. That one not required during this session. Okay, so far this is the setup. Can understand so far? So setup, right? Can I ask you guys how many indicators did we use? Can you help me type so I see that you guys are still paying attention? How many indicators? 4 can 3, 4, 4 okay, 4. So 20 moving average, 50 moving average, 200 moving average, and then the ATR. Okay, very, very simple one, very simple. Okay some of you say 2, but at least you're paying attention And the time frame can be 4 hours, can be daily. Okay, so now let's go to the prerequisite already. Prerequisite is after we set this up, we use our eyes to see. Okay, we can use computer robot to see, but not this module. This module a bit chim to teach all this. Okay, so prerequisite price must be above 200 SMA. Simple moving average, 200 SMA. What does it mean? Okay, this is so the chart you can pull from here. Okay, can I ask you this? From this one look, okay, is the price above 200 SMA? Yes or no? Y or N? This one I will just ask you a few times. Okay, understand this is the 200 SMA. The price must be above. Okay, let me show you the time that is not. Okay, here. Can you see, is it very obvious that this is the green one, You can see it's the most smooth one. Can you see that now the price is below? You can see it's below how many type B? Okay, because I'm going to assume some of you very new, so I'm going to go a bit slower to this. Later, the other strategies can be easier already. Okay, can I'm got tick on my. Okay, got it So this one, so we just wait. Okay, but I must tell you something So when we are looking at the chart at time, right? Of course, we cannot see the whole thing one. We are seeing day by day Okay, so right now we see, let's say, is there a setup now? Oh, price, this is the price, this is the latest is above 200 moving average. So means, okay, can prerequisite. Second one, 200 moving SMA is uptrend. Okay, let me ask you this. This one, this 200 days, this green line, is it uptrend? Yes or no? Y or N? Or question mark? Don't know, right? When we check if the price is above 200 days MA, it's either 1 day or 4 hours. Okay, I teach you guys the 1 day one first. 4 hours, you just change the chart, then it will be the same. Okay, so remember, this one, if it's not clear, then don't need to go and force yourself to see, wow, is it uptrend or not? If you have to go and guess, then forget it. You drag. Okay, now is it uptrend? Is the 200 moving average uptrend? Is it clearer? If still unsure, don't care. Just wait a few more. Okay, uptrend, then you know that can already. Got it? So that why is it called precision profit, right? Is we do not take so much chance one. When we're very clear, very obvious. Can you all please like, oh, obvious one? If it's not obvious, don't need to squint your eyes and say, hey, seriously, is it yes or no? Then go and ask your mother, your father, ask your dog. Cannot be lah. If you cannot see, then forget it. Okay, got it okay. So you can see must be uptrend. Then the 20 and 50 period SMA is above 200 days. So okay, so is the 50, this one, the red one is the 50, blue one is the 20. Are they above? So right now here, does all the prerequisite criteria is met? If it's all met, can you help me type 3? Because there's 3 criteria, right? So it must be that simple one. Okay, must be that simple. That's why it's called system. Okay, you all can see where this is going already, correct? Now, last time people like, don't know, is this buy, is this high, is this low? Okay, now very clear. Uptrend. Okay, this whole thing is uptrend. Okay, now this one 2 above. Okay, how to set up? Enter long means buy. Okay, buy. Long means buy. When 20 cross 50. Okay, that's it. Okay, so when to buy? When to buy? So this is, wait, let me see. When 20 cross above 50. Okay, cross above 50. So meaning to say initially it is below, then cross above 50. So that's why I need examples. Okay, can you see that here? 20. It didn't cross. Oh, this one. Okay. Okay, so maybe this is the better sell. Okay, so you can see this is the 200 moving average. Is this still uptrend? Is this still uptrend? Yes, 20 above 50, 20 and 50 above 200. The price is also above. It went down, but it's above already, right? So here is the ideal time to enter. Now I can tell you in the real trading, for those who trade before, right, you know that it will never be here one, because must finish form finish, then the next day you'll see, correct? Okay. Okay, so you boom, go inside maybe somewhere here. Must cross finish already, then you know ma. So you enter. After you enter, wait for it to go up. Can? Okay, is the entry clear? Is the entry clear? If it's clear, help me type C for clear. Must practice must practice. Okay, but so you see, like that, just now initially we thought it's here, right? But we swipe until here, right? A few months already. Okay, that's the reason why we need 20 strategies. You know why? If you only got one strategy, sometimes you wait for months and months and months. You never get a strategy. You don't have that setup for you. This is called a setup. There must be a certain setup. Okay, then you actually go in. Got it. That's why we go for a few range of strategies. Got it. Enter at the high of the close. Okay, so very good question. So in fact, right, you must understand this is a day candle. Day candle means, right, this date, finish already, correct? Then you realize, oh, confirm close already. Confirm cross already. Here, finish already, right? Then the next day, usually I won't wait until, I won't stay up the whole entire night one. I sleep, wake up, okay, the day already formed. So what I'll see is here. Let me show you this. What we'll see is like that already, correct? What we'll see is like that. Actually, maybe need the next day then open. Okay. What we'll see is like that. Actually like that. Okay. Like that, then it's close, right? Like that, then it's close. Like that, then it's cross. So this one is typically in the morning when I look at the charts. Oh, okay. Cross already. Very good. Then I will enter here. Now, when I enter here, market open will be here already, right? Understand? So I'll be entering at the bottom of this candle. Is that clear? Is that clear? You can trade lower time frame. Can you save the indicator as a template? I think can. Okay, but no problem. You're go and practice setting up first. Because don't need to. The key things I also want you guys to optimize later. Okay, can? So the entry steady already. So happy everybody? Can? This one is a very high probability setup. It's extremely high probability, especially if the trend is uptrend. 200 SMA you'll see appearing over and over again because it's one of the stronger setup. Hey, let me just adjust something. Some of you are drawing something on my screen. How do I make sure you all cannot draw? No, the candle doesn't matter. It's just 50 days and 200 days. Okay, don't draw on my screen. Let me draw. Okay, so understand so far? So I don't need the color of the candle doesn't matter. Okay, candle, by the way, if it's red means that they open up here, then they close down here. So it's red. Then green is they open from the bottom, then they close up. Okay, so if close open means like, the day when the market opens, it starts from here, then at the end is here. So it closes up here. The highest is at the top, the bottom, the lowest is at the bottom. Okay, so this is one very, very powerful strategy, extremely powerful. It's called a golden cross. Okay, so subsequently all the other strategies, I don't have fancy full names. I just want to go through the strategy. Okay, how do you know that the candle is at the bottom already? Oh, no. It works on all pairs. Can you see? It works on everything. This is a very powerful setup, but it's not often you can get it. Okay, you must wait for many, many days to get it. Okay, so the question is, how do you know the candle is bottom? I won't know lah, I won't know. Okay, all I know is, so again, okay, let's see whether there's another example. Oh, another example is here. Here's another example. Can see? Price above 200 days, 20 cut 50, so you enter around here, then continue to ride up. Can see not? Until now lah. Can see? So there's a few entry points on, but the entry point is quite obvious one, right? Okay, so only for uptrend stocks. Can go and practice, then go and use it. Okay, ATR haven't finished. Okay, Iris not yet, because later we talk about optimization. But this is a base. This is the foundational setup lah. Can Okay, can. So okay, let me share with you this. When you first use any indicator, okay, let me explain. Indicator, right? Okay, example, you go here, indicator, moving average, right? Okay, typically there's other ways to shift it on. You can even use, example, exponential, smooth, linear, okay? All this, right? You all use the default. Default. Can you all please type default? You know why you use the default? Because most people are using it. Most people using it, they will take a similar price action, bounce up together, then it's better. Later we optimize. Okay? Actually, today we won't talk about optimization, but we talk about optimization and backtesting. That's where very good. Some of you mentioned already. Okay, what if I test instead of 20, I put 21 and I put exponential. Let's see whether the entry is better or not. Can you see the line shift? You say, okay, maybe I cut here, see whether can I get into a better position. This is called optimization and backtest already. Got it? Okay, I love the fact that you are already talking about this. But for beginners, you'll just use what I have shared first. Okay, to test out first. To make it very simple, idiot proven. Now, the exit rules are okay, that's where ATR comes in already. ATR is used for the exit. So first one, exit when 20 SMA cross below 20 SMA cross below 50. Let's see. Just now our entry point is where 4 hours meet golden cross, but 1 day don't meet. Okay, no need. You just use one time frame. For those who want to use multiple time frame, no problem. You can use it additionally. So these systems, this is called optimization already. I love the fact that you are talking about this. Okay, so when we enter here, can you see we enter around here, right? We enter here. When do we exit? Exit here, lor. Make sense? Can you see? When 20 cross below 50. So probably by the time you exit is here. Okay, can? So how much money you make? Let's see. You enter, let's say here. You exit, let's say here. Okay, open that time, exit. That's about 100, wait. 40 over 1,000 points. Probably about 4,000 over dollars. Depends on the lot size. So from here to here, let's say we talk about one point or one pip, right? It is about $10 or $1. Okay, so pip, right, is about $1. So you see from here to here, okay, depending on your volume and size, right? Probably actually make about $48,000. This one over 100 over bars. 100 bars is 3 months. Okay, so make about 100 over okay. But in percentage, can you see it's 10.59%? Can you see the 10.59? So in about 3 months, 3 months plus, you make about 10 point something percent. Okay, but if you have leverage, example, I told you can leverage a few times. You leverage, let's say 5 times, it's 50% already. Okay, can So is this simple? Is this simple? I know that some of you have some questions, and usually those who have questions is a little bit more seasoned one. No problem. So the system that I share with you guys, right? As I mentioned, POT, correct? You remember POT, right? So I want to go to the POT portion already. Okay, but I haven't. So this one is exit. This one happy make money . But there will be times that this system may not always make money one, correct? I told you already. 80% or even higher probability doesn't mean 100%. So don't mind. I will go through all the system first. Then we talk about possible optimization. Otherwise, I got 20 system, I cannot finish. So because I want to go through everything, and then I love the questions. Okay, then we talk about a place that we can continue to ask questions. Then we continue to learn together. Can Okay, so it's not I don't want to answer the question. Number one is actually I don't know the answer, so I try to pretend I need to move faster. I'm just kidding because already no time. Okay, so trailing stop loss. It's very important guys. Trailing. This strategy is not good for volatile stock. Ruth, very good. So okay, I want to share with you, right? It is very good if the trend is very clear. When you talk about volatile stock, there are certain instances. Example is here. Is it uptrend? Is it downtrend? Is it this is what you call volatile or ranging stocks, right? It's very obvious one. Every single stocks or instruments, there are times of ranging and volatility. There are times where it's uptrend. Make it very clear. So that's why we have a range of things to go through, right? Okay, so let me explain. This is called trailing stop loss. Trailing. What is trailing stop loss? It's not because you get a trail and feel very excited. Trailing stop loss means it will, when as it goes up, it will continue to push the stop loss up. Okay, let me give you an example of how to do it. Okay, so you can see this is a 1.5 ATR. By the way, I captured the slides also, so later you all can look through the slides. Okay, all these slides and stuff like that. Okay. Okay, so let's give an example. Let's give an example. Okay, because now it's not the, okay, we can just click here. Okay, scroll to here. Now it's not the entry, right? Now it's not the entry. We should have entered around here already. Now maybe we see how it goes. Okay, so wow, market gone down by 3 days. Okay, so let's say we want to buy or sell. Just okay. I'm not saying that y'all must use this platform. Y'all can use TradingView, use other things also. But I just give you an example and understand how to calculate the stop loss. Okay, so example, if right now it is the time to enter. Okay, let me show you this. Okay, we have to calculate a few things. Can y'all see ATR? Y'all see ATR? Can you help me type the number beside the ATR 14? What is this number? Make sure that your eyesight is as good as mine. The notes later, I will give you all a link, then you can download. I'll email you all, since you all register for this, right? I'll email you all, then later I give you a link so that you all make sure that you all don't miss it. And the recording also. So don't worry about this. Okay? So okay. Okay, 54.91. What does it mean? ATR 14 means the past 14 days based on the movement of the stock price. Okay, the average means 14 days, all the range of the particular stock move up and down, plus together divided by 14. So they get a number called 54.91. Now 54.91, right, tells you how much the stocks has been moving on average for the past 14 days, up and down, correct? MT4 doesn't work for every single thing, okay? But most of the big stocks that I want are here, except for TSM, but doesn't matter. Okay, now so I come back to here first. Maybe we just use whatever that is here. Since making money, unless you want to buy your company stocks, otherwise I don't think any stocks or instrument really matters that much for certain systems. Okay. Okay, now let's calculate the 1.5 times average true range. What do I mean by this? Okay, where's my, oh, okay, here. You can see, set trailing stop loss using 1.5 times average true range. Because it's moving by quite a bit already. So let's say after I enter, this is not a good time to enter. Maybe, okay, this is ideal time to enter. This one, you can see. Okay, 20 cross 50. I should enter here already, right? And enter the bottom because day open I enter. So after I enter, right, example, the average true range. Okay, let me show this. So let's calculate the average true range of here. Let's simulate this portion. Okay, how to simulate? Give me some time to shift all the zoom thing because it's blocking. Okay, you can see this is the bar that we enter. Can you see the average true range is here? The average true range, well, I have to calculate a bit. Okay, it's 53.57. You see? This average true range when I enter here is 53.57. So after I enter, right, I will set a stop loss. Okay, after I buy, let me show you this. Will there be someone who is able to know how much stop loss is? Me no, because I know that you guys are buying so I purposely push it down to make all of you lose money. Okay, I'm just kidding. But I mean, technically speaking, there's certain theories about like, typical stop loss, or typical stop loss is the previous support, correct? Previous support. So that's why now we add average true range. Usually people won't even go down to that one. But maybe as the market become more sophisticated, that's why we need to POT, okay? Means that we need to optimize. So I'm going to use this example to go very in depth. Then the rest of the trading system will be a lot easier already. Oh, I take 40 minutes to go through one. I feel a bit scared now. Okay, wait. What am I looking for? Oh, wait. I'm looking for the calculator. Okay, so calculator 553.57. 53.57 multiplied by 1.5. Okay, so this is the average true range times 1.5 times. Means that usually the market for the past 14 days is moving by 53 points, up and down, up and down. Now I give myself a stop loss of up to, okay, how much is that? 80 over points. So whatever price that I enter, I put 80.35 points down. Okay. So if you're very new, don't worry, watch this a few more times. So example, I go to a new order. Okay, I go and you see I'm going to buy at this price, right? So this one is I'm going to buy at 5507.25. Okay, I'm going to take this number 5506.45. Okay, I take the lower number, because again, stop loss I want to put a bit lower. Okay, 80.35, 5506.45 minus 80.35. So this is my stop loss, 5426.1. So my stop loss is, okay, 5426. 5426.1. Okay. So this is how I set an initial stop loss. Initial stop loss. Okay. So after I set initial stop loss, okay, I buy. Okay. It's closed. It's closed. Okay. Unfortunately, cannot go through. This is one thing that I cannot do. Then you must enter already, then you can set a trailing stop loss. Then meaning to say it will always, as the market goes up, right? You can see as the market goes up, did you hit my stop loss? Didn't, right? This is my red color line. The stop loss didn't hit, huh? Wow, see, so genius. As the market goes up, right, the 1.5, it will go up together. So this particular line, right, okay, it will keep moving up until it trigger hit, then go already. So you already make the money. Okay, so it's called a trailing stop loss. Unfortunately, I can't share it today because I need to set it in, then after that set the trailing stop loss again. Okay, can. So how did I arrive at 80.53? Okay, the reason for dividing by 1.5, I didn't divide, I multiply. Okay, so I explain again. Average true range, it is how much the market has been fluctuating for the past 14 days. So far, can you understand? So you see this number, as the market fluctuates more, the average true range becomes higher. Look at my mouse. As a market boom, go up and down a lot more, there's a lot bigger variance, right? Then the true range becomes higher. So you say, wow, right now the market very volatile. So with this particular number, right, it's telling me that if the market move about 50 points, okay, here is 50 points. This one, then crazy, man. Then how many points? So at that point in time, if you have entered back then, right, your average true range is about 78 points. So if you set a stop loss, right, you want it to be way below. You want it to be don't like you set here a little bit, then it hit a bit, then you're out of the market already. Okay, when I say set a bit, right, it means example, if you buy here, for some reason you are super genius now. Okay, never mind. Let's say you see this portion and then you buy here. You buy here and then you say I want to set the stop loss just below this candle. Pump. When they go a bit down, you get hit already. So what you want to do is you want to set the average true range. Based on the true range, okay, the mathematical calculation, you want to bring it below. So that's how I calculated. Okay. So how I calculate again is, again, based on the latest average true range. So the latest here you can see is 53.57. Okay, 53.57. 53.57 multiplied by how much, guys? Multiply by how many? Oh no, you can, after you set the trailing stop loss, you can just don't need to keep the brokerage on all the time. Multiply by 1.5. Okay, 1.5, right? So this one is called additional Singaporean. Okay, additional scat loose. Okay, meaning to say I want to have additional buffer. Although if the unlike the stock market will move about 53 over points for the past 14 days, on average they move 53 over points already. I give it another 50% buffer. Okay, so I become 80 points. So when I set a particular stop loss, I will take this number. Let's say if I enter here, okay, I enter here, I'll take this number 522.25. Then, okay, so if I enter here, imagine I enter here, hopefully you all can understand. This one is important for us to go through. Otherwise, you all may miss. Okay, so I want to set a stop loss. If I enter already, I want to set a stop loss. So 5222.25. Oh, I love this number. 5222.25 minus 80 point how much? 80.3 is it? Okay. So it should be 5141.95. Okay, where is 5141.95? 5141.95. Okay, oops, cannot. So I can drag it down lah. Okay, this is 515. So 5141 point, wait 5141.15. It will be here. Can you see? It's a very huge. It's a very healthy range. Okay, won't suddenly get stopped up for nothing. So this is the reason why we put a stop loss. I'll be using a lot of this 1.80, 1.5 times ATR for most of the systems. That's why this one is important to explain one time. Can 53.57. No, they calculate for me. They calculate for me. It's based on the ATR. Okay, but the latest of the latest, right, is actually, if I go, okay, so understand, they'll calculate for me. What you need to do is to look at this number. But this one, because it is not the latest, let me explain to you. Hang on. Wait, let me unshare the screen and then share again because I saw some drawing. I'll do a few more demonstration, then it will become clearer and clearer. But I do hope that Gold and US30 also can. As long as is the criteria. So you're asking me which instruments can, right? This strategy is one that I think everybody can use because it's very, very simple. Okay, can. So I give you all some sneak preview. At the end of this whole 20 strategies, I'll be sharing with you a gift that I want to give to you guys, that we go and do some live trading together. At least live a lot easier. But when train at time, I don't think we should train live, otherwise you all will go a bit crazy. So how many of you all love that? If y'all love to do some live trading together, help me type LT live trading, yeah. So at least when y'all go through, then a bit simpler lah, go in and exit together lah, can lah. But got criteria lah. Criteria means you must sign all the disclaimer, don't come and smash my car or what. Okay, so this is the golden cross. Again, go and review. So example, this is a cross. Then you can enter here, exit here. Okay. So these are some examples. Later I'll give you guys a slide. And then you can set the ATR, average true range, okay, as the stop loss. Okay. So got it. So this is the ATR average true range. Just now I demonstrated a bit already. Okay, can? So okay, so understand POTR. Okay, what do I mean by position size? So this is very important, position size. Okay, so example, just now we did an example, right? Okay. This is very, very important for position size. So just now where is okay, I draw quite a few things, but let me go to this, go back to our entry again. Go back to our entry again. Our entry is here, right? Entry is here, can see? So I'm going to go into some, let me just clear away all the charts first. Okay, so now, right now, is it clear when to enter? Okay, is it clear that you see this one cross, right? Typically, you can only see somewhere around here. Okay, so assuming we enter around here. Okay, we wake up, we see this bar here, but okay, let me shift it, then you all will know. So in the actual trading, right? In the actual trading, you will see like this one. Cross already or not? Don't know, right? Okay, wait lah. Here will be very obvious as cross. So even here, the day before, you all look at the latest one. Has it crossed? Don't know, right? Maybe just touch only. So we won't know one. So go and sleep. This one is day. This one is a day candle. We will know, we go and sleep. The next day we open up. Oh wow, cross already. But too late already, because you wake up, you sleep, the market already closed already. Then you will only enter here. We want to be very, very realistic. Super realistic. So after we enter here, okay, we will be able to go in here. So the open of the chart is about 5303.65. Okay, 5303.65. This one understand? So when we enter is 5303.65. Remember this number, help me type 5303. 5303. Yeah, you just help me type this number first. Then after we click buy, right? Then we will set a trailing stop loss. Now the trailing stop loss you can see right here. The latest when we enter at time, the trailing stop loss is 53. Can you all see the number 53? Can all? 53, 5303. Okay, 53. Can see, So now when you can see 53, right, what do? You go to your calculator. If you have a calculator, go to your mama shop, ask the guy got sell or not. Okay. So 53, or take your handphone, handphone inside your calculator, download the app. Okay. 53.04 multiply by 1.5. Okay, why 1.5? Average true range times 1.5. 79.56. Okay, 79.56. Remember this number? Wow, a few numbers to remember. So this one we enter is what? 5303 what? 5303. Okay, 5303 minus 79.56. So 5303 minus 79.56. Okay, why am I getting this for? This one is for the stop loss. So this one is 5223.44. How do those people who actually announce all the total, their mouth don't get stuck? Okay, 5223. Look at here. 5223, 5223.44. 5223.44, which is around here. 5223. Okay, got it. So around here. So my stop loss will be set around here, which you can see is quite 5223, 5229. Okay, a bit lower lah. You know what I'm saying? 5223 point something. Okay, so this is stop loss. I enter here. I put my stop loss here. If the price cut down here, then I get out already. Or actually got here may have gotten out. Okay, so okay, average true range 1.5 maybe not enough. Okay, but doesn't matter. So but at least you all understand. Okay, in event you get out, I want to ask you guys, event you get out, right? Just now we calculated the ATR is how many points? What are the chances? No, there are always chances on. So that's why I tell you it's 80%, right? 53 points, is it? Okay, so 53 points, right? So you all must understand, 53 points, yeah, you may be stopped out earlier one. So no problem. No choice one. Okay, so this one, if we have enter here, then won't, you will go all the way up. So sometimes it happens. Actually, I'm glad to show you all some examples that may not always work. I show you all everything work, then you all think, wow, so happy. But anyway, come back to here. So we set the stop loss is 53 points, correct? 53 points, right? Let me explain to you. 53 points. Okay, I'm going to write here. So you must understand, if you lose, you may lose 53 points. Okay? In this particular whole entire setup in a MetaTrader 5, right? 53 points, right, can mean $53, can mean $5.30, can mean 53 cents. Okay? Depends on your lot size. This one, okay, this one I don't want. Okay, so I'm suggesting you all go for this $5.30 one. Okay, how to go for this $5.30? Okay, let me show you. Got package one. $5.30. How do we go for it, right? Is we choose the correct lot size. Okay, so we go for 0.1 lot. 0.1 lot. Can you all please tell me type 0.1 lot? Okay, this one when we go through, if let's say for those who are joining us for live trading and all that, then you will do it together, then a lot easier lah. But I want you to I want to explain something. So imagine we go for 0.1 lot, we lose. If we lose how much? $5.30. Okay. We go for the scenario that if we lose $5.30. Got it? Hey, I'm taking a bit of time here. I hope you all don't mind because this one is the POT, the position size. So if let's say each time you enter, right, you lose $5.30, which is we call it one contract lah, one contract or 0.1 lot. Okay. So I want you to calculate for me. Let's say your capital is $1,000. Okay, $1,000. Can I ask you, each time when I go inside, my whole portfolio is $1,000. Each time when I enter this kind of trades, maximum how much can I lose? Can you help me calculate? How much can I lose? Okay, lose $20. $20. Okay. If each time I can lose $20, then this one lot, right? This one contract is I will lose $5. If worst case scenario, I'll lose $5. So how many contracts can I enter? How many contracts can I enter? 4. Around 4 lah, But you all understand if it's $5 nicely, then it's 4. Okay, got it So if let's say you enter 4 contract, so you may lose $21 and 20 that times 4, which is $51.20 okay. If anything happens, you will lose $51.20, which is about 2% of your portfolio. Got it So if really you lose your $1,000 will drop until 9,940 something. Got it? But you leave. But if you win, just now as you see, sometimes you win, you will win like maybe a couple of hundreds of dollars. Got it So understand? So the important thing is at the end, how many lot size you enter. Because just now we go and put mark, right? Trading new order. You see this one? Okay, if I can lose, I already set the stop loss everything. Let's say, okay, volume, I can put one, okay, I can put up to 0.4. 0.4. Understand? So this is important in the end is what kind of lot size you enter. Okay. So this one, if you are very new, again, maybe later next time live trading we do it together lah. Can? Okay. Can So but so far understand right? In the end, calculate everything. Maximum you lose $20. Is this very clear? If it's not very clear, don't worry. Later you practice a few more times. How many type POT? P is what? Position size. So every time you lose this one, rewatch this portion and then put it as your ringtone every day. Go and watch. Okay. Position size is the most important. Later then we optimize. Optimize, I think you all mentioned, right? Hey, maybe the average 2 range. Just now I get stop out. Can I go a bit lower? Can I actually change to EMA? Because we change to EMA also, right? Right. And then optimize and backtest. Then last one we do live trading together. Okay, can So this is strategy number 1. Okay. So far I hope that you all understand the format. Then the rest, I really took about 1 hour to talk about one strategy. 20 strategy means 20 hours. Okay. Okay. Stress. Well, birthday cannot be so stressed. Okay, but understand. The rest should be simpler already. Okay, got it. So you all see the rules. Again, the recording all this you all can rewatch. Okay, I'm gonna go to the next strategy already. Okay, if okay, help me type 2. 2 is strategy number 2. Over ambitious lah. What the heck? 20 strategy. It's crazy, man. Okay, so let's go. Okay. How to take profit is here. Okay. Take profit is when SMA cross 50. Remember? So you enter here, you exit here. Nice scenario. You enter here, pop, exit here. Can see So how much we make? Let's say you enter here. I just draw a estimated line. Exit here. Let's say exit here. You make 49,000 points. Wow, so much, man. Already make quite a lot. But it's over a few months. It's over a few months. Yeah, as mentioned, I make about 10%. No? But if you leverage just now, based on the optimization leverage, right, you make actually 100% because you no times, yeah, you actually make 40 over times more. So you make actually maybe 400%. Okay, can but this one don't get too excited lah. So we risk $50. If we make 50 times, let's say 400, we can make about a couple of thousands of dollars. Okay, over a few months lah. You touch here all that, don't be too worried. Okay, so this is strategy number 1. Okay, let's go strategy number 2. Strategy number 2, exciting. Okay, this is not buy long go, this is just directly buy. This is CFD. Okay, so no options, zero options. This one is straight away just buy and sell. Okay, keep things very simple. Options, that one, okay that one a lot more complicated. Got it, But this one is a good way to actually. Oh no, but if you use this as your entry, then you can use options also. You can use options, but for this case, I'm not using options. Okay. This is working for trending market. Yes. So as mentioned, why we have this one is all trending. Trending. Can you all please type boo? This is for the bull market. Later I'll share with your bear market and also reversal sideways. Okay. So bull market. Okay, now let's go strategy number 2. So you all see this one, I'm using a lot of SMA. Whenever you see I use SMA, right, it is always trending one. And trending strategy is the easiest to use in my opinion. And there is unlimited upside. Okay, because it keeps going up. Okay. So the next one is called parabolic and stochastic. So okay, trend following 4 days daily. I usually don't go 1 minute, those kind of things. But if you want to test 1 minute, go ahead and use it and test. But this one is what has been used already. Okay, so you can use for various currency, stocks, crypto also can. Okay, this one most of it. Only a few indicators is used for specific a few assets. Okay. Indicators, parabolic SAR, and also stochastic. Okay, so let me do the setup first. Okay, as per usual, let's do the setup. I'm using 1 day go. Okay, so you can use other things also. But let me go to 1 day go. So how do I go to go? I got my go. Okay, I don't have to go. Okay. So this is go. You can see this go versus US dollars 1 day. Okay, day. See, click time frame. Click on the 1 day. You can do 4 hours also if you want 4 hours, no problem. Okay, you can click on this to go to the latest. Then after that, right, insert indicators. This one, trend, parabolic SAR. Alamak. Insert indicators, trend, parabolic SAR. Okay. So now the setup usually use default. After that, we can optimize subsequently, but for now use default. Got it? So okay, you can see that this is a parabolic SAR. This is the dotted lines. It will be either above the line or below the price. Above the price, below the price. Okay. This is how it's being used. The next thing we use is stochastic. Stochastic 533. Okay. And then ATR, average true range. Average true range is mainly for stop loss. Trailing stop loss. Okay. So indicator, this one oscillator. Okay. Stochastic. Can you see here? Click on this. 533. Okay. So 5 K period, D period, and then slowing 3. Okay. So click OK. So it'll be below. Now let me show you the then ATR. ATR is the average true range. That one is to use what is it used for, right? Is for the stop loss portion. Average true range. Okay. So use a few things. This one can be a little bit smaller because we just need the number later. So smaller. Okay, this one is a very powerful method also because this one also shows you whether the trend is going to like swing upwards. Typically, we are looking for so I show how to do this. Oh, still got sorry, I never put 200 days moving average. You realize I really like to use this because it gives you the trend. And once you know the trend, a lot of things easier to manage. Simple moving average. Blue line, let's go. Okay, so first thing, price is above SMA 200 moving average and then it's uptrend one. Example here, you can see right. You see choppy one here, don't touch. This kind, don't know where is it going. Don't go and play with this kind, right? Play with those very obvious one. Okay, so sometimes it may take a few period, a few days, few months. You have to wait. That's why you can go and check different kind of stocks and different kind of asset classes. And then finally, okay, this one, okay, example, this one go down already. Okay, example here lah. Okay, example here, we wait for it to go uptrend. Okay, and things like that. Okay, so you can, if it's not clear, again, you can use other, maybe even 4 hours. We try 4 hours again. But typically, the 4 hours and the 1 day one, they will work about the same. Okay, can? Okay, so now, so the entry, right? The entry is you enter long when parabolics are turn from top to bottom. Oh, what are you talking about? And stochastic is above 80. Okay, so what am I talking about? Okay, I do some screen capture already. Later we can go and do some real life chart. So you can see it is above. Okay, sorry. For parabolic SAR, that's why I didn't put. This one, it must be above 200 days MA. Can you see above 200 days MA? The trend for this one is not that critical because we have parabolic SAR and stochastic together to help us see the entry and exit. Okay, so again, that's why I didn't put that 200 days moving period must be uptrend. So this one price must be above 200 days moving average. Can you see? Here, is it above? Can you see? It's above 200 days moving average. And then, important, is parabolic SAR. This is the dotted line. Initially, it is on top of the price. Okay, initially it's on top of the price, then boom, goes to below. Okay, goes to below. From top to bottom. So there's a change in the movement of the price. Okay. Oops, sorry. From top goes to bottom, you see that the price is a movement for it to actually push up. And then the stochastic this one must be above 80. 80, okay, must be above 80 to show that there's momentum to push the things up. Then after that, we exit. When do we exit? We exit again when parabolic turn from bottom to top. Now, parabolic, right? This particular black dotted line, right? You can see it like a kind of like a support like that. So they support, push up, pop. Then after that, suddenly change already. Can you see change? From bottom, go to top. Can you see or not? If okay, help me type P as parabolic SAR. So this is a very cool method, right? Okay, you'll say cool. Okay, yeah, got this words. To actually know or when to go in, when to go out. So typically they'll say, you go in here, you get out here, you go in here, you get out here. But when you add it with the stochastic and the moving average, it's a lot clearer. Okay, so you can go in here, you get out here, but very, very short range. And then you, okay, so these are the things. Okay, So after that, the trailing, okay, same thing, stop loss, trailing stop loss, as mentioned, when parabolic turns. When parabolic turns, it is an indication that it is a change in trend already. Okay, got it. So let's go and take a look at some real ones. Okay, real ones. So let's see whether got example here or not. Okay, actually a lot of example. Oh, the stochastic. Okay, can you see? Example here. Is it obvious that the price is above 200 days? Above 200 days here. Okay, so you see the setup. Okay, 200 days price must be above. Sometimes the good one is also right. When the price, you can see when the price goes above 200 days, just goes above 200 days. Okay, but this one don't have a change. Okay, you must wait for it to go down, then boom, then as in the parabolic initially is on top, then boom, goes down. This may be a good entry. Let's take a look. Okay, but this one not yet. You know why not yet? Because the stochastic is not above 80 yet. So there must be a few things aligned. Stochastic above 80 is here. So within three dots, 1, 2, 3, 3 dots, there is a stochastic push up, right? Okay, actually within two, they already push up already. Above 80 already, right? You can enter here. When we enter here, okay, we will exit here. Actually, not a lot of profit. Okay, but didn't lose money, not a lot of profit. But there's other possible entry points. This one, what we are looking out is for the breakout. Okay, what we are looking out is for the breakout. Okay, so okay, for can you all see the is it obvious? So another example, above 200 days, parabolic, change trend, stochastic above 80. Actually here, I think also no. Down. Actually here, right, we could have entered, We enter already, we have exit here. So this portion, we have make a loss. Can you see that? If you can see that, help me type Y. You see, here above 200 days, parabolic SAR change, we actually enter here. Then actually it goes down again. So this one we actually make a loss. But after that, the trend change again. The trend change again, parabolic, okay, from top goes to bottom, pushing the price up. When you push the price up and the stochastic, right, is above 80, we can enter here again. Then this one we have a longer ride up, and then when it change, we can get out of here. So from here all the way to here. So this one we will have make a profit from here to here. Okay. I'll take a conservative lower point, right? This one will be about $500 over dollars. $500 over dollars. This one, when we enter here, we exit here. How much did we lose? Let's see. The first one, enter here. So we exit when it enter here. Okay, because this one is the next day. This one we will lose about $400. This one actually lose 400. This one we win 500. Okay, so again, we must always aim to win more than we lose. Okay, but every time we lose about 2% only. 400 is depending on your lot size. We can actually string it down to $40 and divide it by 2. Okay, so it all depends on. But can you all see how the parabolic SAR works? Okay, again, the key thing is we must do back testing. Okay, back testing. This one is another possible good one. Can you see? Above 80, stochastic above 80. From parabolic, change upwards above 200 days MA. So this one go in, probably will exit down here. Can see, right? It becomes a lot clearer lah. But remember, like again, we want make about 16 over 1,000, you know, 1,000 over plus dollars. Okay. Now again, you must understand, now we are seeing the big picture. But when we are actually doing the live trading, it will be like that one. We'll see one candle by one candle by one candle by one candle. So I mean, for some of you guys, you want to go for 5 minutes, go for 30 minutes, right? It is also possible. But this one will take a bit of your time to monitor the market. Okay, but can you see? There's quite a lot of like above 200 days, then a lot of above 80 stochastic, enter, exit, enter, exit, enter, exit. This one quite fast, about 30 minutes. It can even be a 1 minute time frame. Okay, so let me see any questions. Because after I need you all to, what is the rate of winning? This one parabolic, right? Actually we did a back testing. It's about also 80 over percent. Based on these parameters, can it be more? Actually can be more. Now, winning rate is not everything. Sometimes, let me explain to you guys this. Okay, I think this is a good question. So before I go to the next strategy, let me share with you winning rate, right? Example, if I tell you I win 8 out of 10 times. So I win 8 and then I lose 2. Versus another one, I win 5 out of 5 times. Okay, 5 out of 10 times. So 50-50. So can you all tell me which one is better? Is A better or B better? Which one is better? Typically, a lot of people say A better because A got 80% winning rate, then B got 50% winning rate. But what the payout ratio is very important. Okay, the expected payout ratio. Because for example, this one, right? If each time I win $1. Okay. But each time I lose, okay, I lose $100. Okay, or don't need 100 $10 Okay, $10. So if each time I win $8 I win $8, I win $1 for 8 times, so I get $8 right? So if I play 10 times then I lose 2 times I lose $20 already. So it depends on the win-lose ratio also. Okay, not just about the winning rates. So let's say 50-50 If I win $2. If I lose $1. Can you all see this one is much better? So B is actually a much better strategy. Okay, this one I need you all to have a snapshot of understand what it means. So through a lot of back testing, your test, so doesn't mean sometimes I win lesser times, but each time when I win more money. Actually, it's better. Understand so far? Yes, which one makes the most absolute? Okay, got it. So this one, we were okay. All these are very important concepts, but again, as you all get used to it, that's why when you all start POT, remember POT? Can you all please type POT? Wow, I'm going to nag you guys again. POT. Always position size. After a while, all this will become more and more obvious to you. Optimize and then live trade. Okay, strategy 3. Now it's 10 o'clock. Okay, I'm going to push on. Strategy 3 is called Ichimoku clouds. Okay, they call it Ichimoku clouds. This is one glance you can see whether to enter or exit. It's by the Japanese. So the things that you should invest in is usually the Japanese related stuff, like Japanese USD or Japanese ETF. Okay. So now let me share with you all. This one is a very interesting method. I'll not go through the stories, but let me share with you all how to use it. Then as you all go through all these strategies, use one that for you say, hey, well, this one I really like it. Because I can tell you after we've gone through so many strategies, right? There are some strategies that works better for some people. Very, very interesting. Okay. Let me just get rid of all this. Okay. Okay, Ichimoku. Okay, this one I should go for Japan USD. Japanese yen. Okay. So this is the Japanese yen. Okay, we are going to use, I don't need RSI, but let me just put it down first. Okay, so Ichimoku, right? Japanese yen, this one we go for 4 hours, 1 day. But most of the time frame, it depends on you, how fast you want to trade, okay? Candlestick also by Japanese, is that correct? Yes. Later I'll send you all the notes. But I want to go through with you all first. Otherwise, I send you all later, you all don't really understand what I'm talking about. Okay? Can So now, let me remember where is it. Okay. Here, indicators. Okay, indicators. Give me a while. Someone is trying to get the Zoom, that's why my indicator keep running. Okay, wait. Indicator. Trend. Wait, let me emit. Okay, someone is emitting. Okay. Hang on. Indicator, trend, Ichimoku. Okay. Okay, you can see this is a setup. So the setup, they have a few lines. These are all Japanese names. The Tenkan line, Tenkan Xian, Xian is line. Okay, then after that, the Kenji and then the Senko. Okay, so 9, 26, 52. So you can see the parameters here 9, 26, 52. Again, use the obvious ones. I mean, use the default ones because all the Japanese who use this are using this. When you click, right, wow, this is very interesting, like anime, right? Okay, so this is a very interesting portion. Let me explain to you a few things. Hang on a minute. Yeah, we'll be showing the recording, everything later. Don't worry about it. So, okay, the red is the Tenkan, and then the blue is the Kenji. Okay, remember a few of these. So you can see. So, okay, the prerequisite is the price must be below the Chiku span and above the cloud. Okay, so let me explain to you what is the cloud. Can y'all see this thing with the scratch line? This is called the cloud. Okay, so when you enter, right, is when the stock price, quite a few things. When the stock price is sitting above the cloud. The cloud shows the trend. So when the cloud, all these clouds when it's above the line, it shows that it is downtrend. When the cloud is below the price, it shows that it's uptrend. Okay, so this is a bullish one. So we go for uptrend. You see, this one is above the clouds. Very cute lah. Okay, so the Japanese always like have all these very interesting ways of doing things. Okay, 天杠 T 天 and T lah. Correct. Please show again. Wait. You mean how to enter it? Okay, insert indicators, trend, then Ichimoku. 一目了然 They call it 一目了然. Okay, one glance you can see everything. Okay, something like that. This one's slightly complicated. Okay lah. So don't worry. If it's like very complicated to you, don't need to do one. Okay. So again, how do we do? Okay. So the price must be below this. It's like the 天线. This one is the cloud. Okay. So the green color one, the green line, right? It's like the ozone layer lah. Okay, maybe I don't know whether they make sense in Japanese. Okay, so the price must be between the green color line, okay, the green color line and the cloud. Then this is a prerequisite. The green color line is like the boundary lah, the ozone layer and the cloud. It cannot be in the space lah. In the space then too far away already. Okay, this one in the space don't. Okay, so don't want it to go out of the earth. Ozone layer and the cloud. So it's somewhere in the sky. Okay, somewhere in the sky. So when I see this, I also feel like, oh, very amazing. Okay, so this is the prerequisite. So you look through every day. I mean, not every day. We go and wait for the setup. Okay. The price is above the clouds and then not out of the space yet. Out of the space, then don't go in already. Okay, can you see this is the prerequisite here? You can see how many type Y. The Ichimoku is more complex. But I tell you, a lot of the people, Japanese who use this to trade, they are making very good profits, and then quite consistent one. I don't know whether you all seen those Japanese, but unfortunately, the language barrier, so a lot of people don't understand this. Okay, so this one. So remember the green color line and the cloud was. Then when is the entry? When the Tenkan crosses the Kiji. Okay, I don't know whether I pronounce it correctly. But basically, let me show this. Double click again. Okay, so the Tenkan is the red one, must cross the Kiji, which is the blue one. So the red one must cross the blue one. So the color you don't go anyhow change. You anyhow change later, you see the one that you do with me different, then you also like, hey, how come like that? Okay, so can you see? Example here will be okay, here the red color already crossed the blue color line, and the price is above the cloud plus below the ozone layer. So actually here will be a good entry point. Okay, it just cut above the cloud, sitting above the cloud already. Then likely we may enter here. Likely we may enter here. Because here, after it forms that day, it's still between that two things. Still on earth, above the clouds. Okay, cut already, the red above the blue, then you enter. Then you ride out all the way up. Okay, can you see it's actually, you're going to check this out. It's actually works like wonder. So that's why y'all must do POT, go and back test. This one is a very, I'm pretty mind blown. Okay, how they actually come up with all these things. But they did like 30, I was reading the origins of this. They did 30 years of backtesting, 30 years to actually come out with the variable 9, 26, 52. Okay, they test many times already. Okay, so they keep initially they test maybe a period 5, 10, 20. Then after that 9, 27, 76. So they keep testing the variables. Okay, now later I'll share with you all. There is actually a software called MetaTrader 5, which is this one. Okay, they can help you immediately test out which is the best number, which is the best period over the past maybe 10, 20 years using all this particular stuff. Okay, later I'll show you all. One button can do everything already. The green color line is very adaptive, right? So have you used this before? Chiwing? Okay, it's something quite amazing. Okay, so anyway, this is the profit target. So profit target or exit when any of this happen. Now, the first thing they actually recommend is to set profit target at the next significant resistance. What does it mean? Okay, let's say you enter here, right? Just now we say we enter here. We also must look back. Okay, is there any significant? They don't have that. Okay. So if let's say there isn't any significant resistance, right? Then there is not a reversal lah. Okay, so don't have. So this one later we go through some more to see what do I mean by next significant resistance. Okay. So example, if you have entered here, right? Okay, let's say you say here, cut over here. This is called a resistance. So you may have set a target here already. Resistance means the high, like the mountain top. So all these are mountain top. Okay, all these mountain top, okay, forms a resistance. So when we enter here, there's no higher mountain top than when we enter. So don't need. Can how to enable this green line? The green line is again here. It will come out by someone. Insert indicators, trend, and then you click this Ichimoku. Okay, once you click the green line will come out already. So again, insert, indicators, trend, and then Ichimoku. Can you see Ichimoku? Very cute name. Okay, so got it. Okay, now this is the first entry lah. There's a next significant resistance. If don't have, doesn't matter. Second one is if the price cut above this Chico means, remember I told you the ozone layer? This one is the ozone layer. You go out, then pump, cuts across already. So just now someone mentioned the green line is very adaptive. It actually goes down before the price goes down. Can you see or not? Can you see? The price haven't go down yet, the green line already go down. So once it cut right, you get out already. Is it amazing? Oh, it's super amazing, right? This one. The Japanese can come out with like the most amazing things, man. Like usually most of the indicators is lagging one. This one is actually leading, you know. Right? Can? Okay, so if cut, also get out. Next one, the Tenkan cuts below the Kijun, okay, which is initially the red line is above the blue, right? So when the red cuts the blue here, you have to get out. But if it may cut earlier, in this case, the green line cuts first. But if haven't cut right, here you should get out already. The red cuts below the blue. Is it okay so far? Can? Okay, how many times? Okay. I know a lot of things. Oh yeah, I suddenly feel like I should just talk about teach 3 strategy lah, not teach 20. I feel a bit dumb. Okay, never mind. So the stop loss, amazing. Same thing lah. Trailing stop loss using 1.5 ATR. Yeah long. So ATR is average true range. Okay. So I recorded this one already. Later you're going to rewatch. This one we'll talk about it. But don't have to too worry about it. But you can see it is really pretty beautiful. Okay. So same thing lah. There's quite a number of other exits and entry. So here, after what you can see lah, price above, cuts above, enter here, cut above the ozone layer already. Can get out already. If you don't want to get out here you can get out. So you enter here, exit here, probably make a couple of hundreds to a few thousand already. And this one 4 hours. You can even go even smaller time frame. Okay, but I like to use this on a bigger time frames like 4 hours to 1 day and use on the Japanese yen. Because why use on Japanese yen? Because this is created by Japanese. So we want to use with the assets that most of the other people also use, using the same thing. You can test out 1 minute also. So POT. Can interesting Yeah, I continue I go through all the strategy. Then you all slowly go and digest over this weekend. Can or not? If okay, how many times? Okay. Otherwise, we'll never finish one. So I realize I'm sorry, I'm a bit ambitious. This one should be like maybe a 3 days class or maybe a 4 days class. Okay, anyway, I got show some examples here. Okay, so again, POT, I remind every single time, position size, optimize, and then live trade. Position size means you go and look at the stop loss, maximum, worst case scenario, how much I lose. Make sure calculate backwards. This is the amount I put in so that if I lose 2%. Okay, cannot? Okay, next one. Turtle Trader. How many of you heard of this before? If you heard of this, help me type TT. TT Turtle Trader, right, is very, very famous. They turn a few 100,000 into 175 million in 5 years using this system. These systems become more and more well known. And I want to share with you, right? This system also let me understand something. It's not about the complexity of the system. Sometimes it's a very simple system, but the thing is position size. Okay, so you can see 20 days high, 20 days low. That's all. This one used for daily time frame. You can use for commodity of FX. Okay. So okay, let me show you this. This one is one of the simplest system. One of the simplest one. Okay. We can even automate trade it on. I'm going to use Go. Okay. Because when they talk about trading this turtle system, a lot of them they use commodities. Now, the idea is this, because the market, right, it goes up, but most of the time it also ranges on. So there's a lot of times when it range, then you just need to make use of it to range, and then when it breaks out, you enter. Okay, so let me share with you. This one you got to need some calculation. How to do calculation? Let me stop this first. Okay. Okay, calculation very simple. Okay, so example, right? You must calculate. Let's say you're here. Then you calculate 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, maybe it's called a 20 days high lah. So this is a 20 days high. So example, you are here trading 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. So 20 days high is here, right? 20 days high is here. Then you draw a line here. So where's the 20 days low? 20 days low maybe is here. Okay. 1, 2, 3, 4, 5, 6. So understand maybe you're watching at this range. Okay, understand? You're here. Okay. So you're here. Let me just close it. So this is what it looks like on a day-to-day basis. You see it's ranging on, right? So you watch the 20 days high, 20 days low. Now, after you draw finish, right, you wait for, okay, so this is the prerequisite, the setup is like that only. The setup, 20 days high, 20 days low. 20 days must be days. This one only used for days. Okay? Total traders, I didn't see other time frames. Okay? So you long means you buy after the day after the price breaks out and close above 20 days. Rolling 20 days? What do you mean rolling? Okay. So 20 days later, if let's say 20 days later, I think I know what you're talking about. So let's say 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. Now it becomes here, right? Actually, the 20 days are, wait. Let's say here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, let's say 20 days later, actually the high dropped to here. That's what you mean, right? That's what you mean, right? Okay, that's what you mean, right? Correct. Okay, actually, you're right. So you understand, So the 20 days keep adjusting one. Because as 20 days, this one is no longer the high already. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. Okay, somewhere around here. Okay, can be around here also. Okay, so now what's very important is this. Then your low also adjusts accordingly. Rolling 20 days. Is that what you're asking? A good question. So understand? So you must keep counting 20 days. So every time one day, if it's the high no longer exists, then you must adjust accordingly. So you must keep counting, but you don't need to keep counting 20 days. You only count one time, then every day you just adjust only. Okay, when adjust, okay, so example, this is the 20 days high already, right? When do you enter? You enter the day after the price breaks out and close above 20 days. So you can you see the price breakout and close above 20 days here? Okay, close meaning to say at the end of the day, it closes here. So it's above my 20 days. Is it clear? There's no other indicators involved, only just drawing these two lines. If it's clear, help me type C for clear. So you enter here. After you enter here, your stop loss, you put below the 20 days low. Below the 20 days low. Okay, so 20 days low is here, you put your stop loss here. Okay, then it goes up. So never stop loss. Okay, never stop loss. But you continue. Okay, so and then you continue to roll 20 days. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. Okay, so can you see the 20 days initially was just now there, right? Now becomes here already. Now the 20 days increase already. Okay, the 20 days high increase. Okay, and then the 20 days low also increase. So initially your stop loss is here, right? It will increase to here. It will keep going up. Okay. So as it breaks, in the total trading, right, they even add more positions. Every time it break, I'll add position. Every time it break, it add positions. So it keeps going up. Then your 20 days low also keep going up. So can you see, initially is this box, then go to this box, then go to this box. It will keep going up. It's also known as the Davis box. Okay, I mean, they didn't say that it's the same, but it's very similar. So by the time, right, you keep going up. Okay, so this one is the 20 days high already, right? The 20 days low probably will be until here already. Okay, as it goes out, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. So the 20 days low maybe is here. But it keep adjusting one. Then the next day here, then it will go up. It will keep going up. Can you understand that? Is this complicated? Can you understand? So every day you must go and count and then adjust it according to, based on the last 20 days, where's the highest, where's the lowest. Okay? Got it? And then when it breaks down below the 20 days low, okay, here you can see, breaks down here. Okay, so okay, the 20 days low doesn't go lower one. It doesn't go lower. It will keep going higher and higher and higher. And then eventually when it breaks, then it breaks already. When it breaks, then you get out of here. So we enter somewhere around here, we exit somewhere around here. Okay, This one is a very powerful strategy, but every day you must go and count 20. Okay, so for those who cannot count until 20, then you got some problem. 20 days candle equals to 4 weeks, yes, correct. So it's a 5 days, 5 days, 5 days, 5 days. So the past 4 weeks, which one is the highest, which one is the lowest? Break, enter, break down, exit. That's it. It's a super simple strategy. This one, right, the win rate, right, is not 80%. This one, the win rate, right, is actually can be as low, sometimes can be as low as 30%. So sometimes a lot of false breakout. So the turtle trader has been known to like lose a lot of times on. But when they win, okay, so what the turtle trader, what they're looking for is a very huge long trend. Okay. So when it goes up, you keep chasing. I mean, not chasing. You keep riding the thing up and keep adding positions, right? And that's where they turn 100 over 1,000 into 175 million in 5 years. But this one requires POT. Can you all please type POT? This one is actually a very simple strategy, but the win rate is not very high. A lot of people cannot take it. But when you win, like you all have seen extended amount of like bull run, right? Pam, that's where you make a lot of money. Got it? Can you understand? Okay, so this one I realize a lot of people cannot take it one, but really make a lot of money. Yes, they hold positions from I think Glenn you also know and they really make a lot of money. POT, okay, POT, I'm coming to that. Position size, optimize, and live trade. So 20 days high, you break, and then 20 days low. But it's rolling, it's adjusting. Okay, if this one is a bit too complicated for you, I strongly don't suggest this for beginners if let's say you are not used to like keep losing money. Okay. But each time you lose, you should lose about 2% only. Got it? Yes, okay. So remember, all this is trending, bullish strategy. Okay. I'm going to push on. Is it okay? Can? Then later you all review and then look at the slides. Can? Okay, help me type 5. Strategy number 5. Okay, the good news is the quite a number of them is reverse, meaning to say it's bear strategy, so it's an opposite only. Okay. So strategy number 5, okay, this one is very interesting also. Okay, this one is called alligator. Anybody heard before? If you heard before, you all can type who is the one who created this strategy. It's not me, it's not me. So this alligator strategy, right, is created by Bear Williams, a very famous trader. He actually created a number of strategy, and then this one is one of the one that is stated to be the highest probability also. 1 hour time frame, commodities FX, use 200-day simple moving average, use alligator indicator, and then use MACD. Three things. Okay. So let me go through some example. Let me see the example that I use. Okay, Euro USD. Let's go Euro USD. Euro USD. This one is 1 hour time frame. So Euro, this one is Euro USD. Click from 1 hour time frame. Let me clear all the other things first. Charts. I hope you all are you all learning something so far? Got value? It got value. How type V okay? So that I know that everything is still okay. But again, later I will just send you all the slides, the recording, then you all can rewatch again. And then go and test out. POT, go and test. Okay. Indicator list. Let me remove also. Okay. Okay. So this is Euro USD. Okay. Now the few indicators that we need. Number 1 is 200 SMA. Okay. Insert 200 SMA. This one quite used to it already, right? 200 simple moving average. Okay. This one is a trend strategy. Oh, now I hope you all love 200 moving average. This one is one of my favorite to see the trend. Second one, alligator indicator. Oh, then very cute. Okay, alligator indicator. Indicator. Oh, okay. This one is not here. So this one, right? This one, okay, you have to go to view. You have to click this thing called navigator. Can you see navigator? So later you all rewatch that time, you all can see. Then this one you must scroll down. Okay, Bear Williams. So it's under here. It's under indicators. Here, under indicators. Scroll down. Bear Williams. He got quite a few indicators. Got one is called oscillator. Okay, but we talk about alligator first. So alligator. Wait first. Okay, alligator. You see, by default, we don't change anything on. Okay, you change already, then it becomes, but you can optimize subsequently. So all these 13.85.853. Okay. So 13.85.853, all these, just click OK. Okay. So MACD 12.26.9. Okay, so also don't need to change much. MACD, same thing, insert. MACD is a oscillator. Oscillator means the one that they show below the chart one. Okay, so click MACD. You can see it will happen. Parameters. Same. Okay, below the chart. Okay, it will happen here one. Okay, so now this let me zoom in a bit for you guys. This is a very cute a lot of very cute indicator names. Okay. Let me just think of some people still coming. Okay. So now let's look at the setup. The prerequisite price above MA, MACD in positive zone and increasing. Okay. Then we enter when 5 SMA cross 8 SMA, 8 SMA cross 13 SMA. Okay. So what does it mean? You'll see this particular indicator is called crocodile. And they call it crocodile, right? It's because the price, can you see this? The line a bit hard to see. Let me make it a bit bigger first. Make a bit bigger line. Okay, a bit better. Now, so example here, you can see it is above 200 moving average. Okay, above 200. Oh, this one is Euro USD. Okay, very good. So then very easy to go in. So as long as uptrend above 200 days moving average, right? Now, can you see that this line converges? When the line converges, they say that alligator, the mouth is closed. So what they want is when the alligator mouth open. This is really what he say. I'm not bullshitting you. So when the alligator mouth close, then when it open right is when the green line goes highest up, red line here, and then blue line here. So this is the portion that we will enter. Green above red, red above blue. Here. Can you see? Then once it opens, right, the mouth must become bigger and bigger. Once they start to close, then you actually get out again. So here, okay, can you see? So green above red, red above blue. Now what is green, red, and blue again? Let me show you guys again. They never put the number. Okay. But it's okay. So you can see that the green line is the most sensitive. So the green is the 5, the middle one, the red is the 8, and the 13 is the blue. So in simple terms, you can see that most of the time it will work out in a way that you can see when it's uptrend, the green, red, and blue is like stacked on top of each other one. So green on top, blue, red, then blue. Can you see? Is it able to see? If you're able to see, how many type A for alligator? Now the entry, right, must be supported. Listen carefully. By two things. Number one is the moving average must be below the price. The price is here, moving average is below. Okay, preferably I like it when the moving average is already uptrend and obviously uptrend. And then the MACD, can you see MACD? This MACD histogram. MACD histogram, right? These are the MACD line. If it's here, right? If it's here, can you see? If it's here, you don't enter. You must already be in the positive zone and increasing. So actually here will be a possible entry point already. Because this is the part that the alligator's mouth open. Green, red, and then blue. So green, they call it the lips. Red is the teeth, and then blue is the jaws. So now the mouth start to open already here. And then the MACD is increasing for the past few days. That's where you enter. Okay, can So this is how the entry and exit works. And it's a very trend following kind of method. So now, the exit, right? Okay, the entry is, this is how it works. The exit is when the alligator mouth close. Okay, when they converge. So when do we exit? We enter here, correct? We enter here. Here, do we exit? It is closing but haven't touched yet. The mouth haven't closed. Maybe just choke a bit on the fishball. So what happens is here. Can you see it converges? So once it cross over, actually here, right, is the first sign already. Can you see the green and the red already cross? If you want to be safe, the confirmation is here when everything cross over. You want to be safe, when green cross over the red, you can close already. Okay, here is the closing point. Oh, actually here drop a lot. Okay, you can close already. Okay, so what happens is you will enter here, and then you will exit somewhere around here. Okay, once it close, the next day you can see, then probably somewhere around here. So about 800 points in a few hours. This one, how many bars? Okay, 77 bars, 77 hours, maybe 3 days. 3 days, you make about this distance. Okay, can? Okay, so it's okay, clear. So all this quite visual one, quite visual one. Okay. This one alligator, the suggested time frame is 1 hour. But no problem. Same thing, like I mentioned. All this, right, you can use for 30, 15 minutes and see. Actually, this alligator one, when I go and backtest, right, quite interesting. You can see quite a lot of again, that's why POT when you go and backtest, then you see. Must be clear, You see this portion, is it clear or not? Any entry or exit? Don't have, right? Don't go and touch this kind. Go for very clear one. And usually very clear one also comes with the trend. So maybe here a little bit clearer. So above the 200 MA, open up the mouth already, pump, enter. Enter already, here you can exit. Okay, this one may not make a lot of money, but it's still above 200 MA, the mouth open again. The mouth open again, you can enter here. Wow, this one got a big spike out. Okay, but here you exit again. So you can enter here, exit here. This one 15 minutes. You can test different time frame. Okay, Ken? Got it. So this interesting. Okay, so this is indicator number 5. So far, do you all need a break or can I continue? Yeah, MACD is moving average. Is there any use for the MACD red line? Oh, for this case, don't have. This MACD red line is used when people say that same thing lah, must be in the positive zone or the negative zone. But in this case, it's using histogram. Can continue? Okay. 5 minutes. Continue. Okay, anyway, it's recorded, so I'm going to continue. Then for those who need a break, don't worry, continue. I'll be, you can go and rewatch this thing again. But you won't miss out that much. Quickly go for toilet break. And then after that, remember POT. But we're going quite smooth already. Okay, yeah. Strategy 6. This one should be the last uptrend. Okay, maybe I finish this one first. I finish this one first, then we take a break, okay? This one is the last uptrend strategy. So I got 6 uptrend strategy. Go envelope. Let me confirm. Yeah, correct. The rest are downtrend already. Downtrend and sideways. So for gold envelope, right, this one is another indicator. Good for 1 hour, good for gold, because gold envelope. Somehow it is very suitable for gold. But same thing you can test out with other instruments, no problem one. 200 moving average envelopes, and then, okay, using 200 moving average and envelopes. So same thing, above 200 moving average, and then the price goes below the envelope low band. Okay, let me show you guys this. Let's go to the gold. Let's go for gold. Gold. 1 hour time frame. Okay. Insert indicators, moving average 200. You see this appear a lot of times. Because, where's the 200 moving average? Don't have one. Did I insert? Oh, okay, 200 days moving average here. Okay. So this is Gold USD. Something that I realize a lot of traders like to use. Next one, envelope. Okay, where is envelope? Envelope. Okay, envelope is here. So it's on the left side. Okay, under indicators. Scroll all the way down. It's under examples some more. Okay, examples. Envelopes. Can you see envelopes? Okay, here inputs is already set for us. Okay, no need to change. Type OK. Then this is the envelope. Oh, wait. Sorry, the gold one need to change. Allow modification. Inputs. Okay, the gold one period is 20 and deviation is 0.55. Okay, period is 20. Deviation 0.5. 0.5. Okay, this one is the only one that need to change. Okay, press OK. So this is how it moves. Can you see the whole channel widens? Okay, so this is okay, can. So the price must be above 20 MA, and then the price goes below the envelope lower band. What's the envelope lower band? This is the lower band, this is the upper band. So when it goes below, it is like here or here. Oh, you got it? This one is a bit of a mean to revision, reversion to mean, okay, kind of a strategy. Means that this particular band serves as like almost like the support and resistance line for you, where they draw out for you. Okay? So, okay, example, just example. So what happens is the entry setup is the price goes below the lower band. You understand on lower band? No, okay, this is ideal for go 1 hour and then this period. If you want to use this envelope for other instrument also can, but the period and the deviation and the time frame may be different. Okay, but go and same thing, optimize. This is quite an interesting strategy, but there's a lot more. Later you all choose 1 or 2 you want to go and see that, hey, this one interesting. Okay, because right now, maybe after this one I ask you which one is the one that catches your eyes the most. Or like, hey, which one is the tree that you want to test the most. Okay, can? So, okay, so now, see, setup price goes below the lower band. Okay, example, this one, it goes below the lower band already, right? All these are possible setups, all the possible setups. So goes below the lower band, okay? But typically, we want the whole entire candle to be outside. Once it goes outside, right, then I should put here. And then when it cross back up here, boom, goes inside already, here. Can you see inside here? Then you enter. So the whole candle go out of the band. So this one is they call it revision to mean. So it always go back inside the band. Always go back inside the band. So if it goes too far out, there's a time you say, haha, I think we are going to come back in again. Understand? So this is the idea. You will always stick to the band. Okay, but the band is actually always draw around the goal. That's why it always sticks to the band, right? But the whole key idea is, once it's outside, this is the criteria. The setup entry is here. goes back inside the band. Actually here, this one already inside already. So once it's closed, this one you can enter. Okay? Because again, you will not be able to know whether it's inside or not, or whether you will close back down until it's finished forming. Finished forming, this is the part you enter. You probably enter somewhere here. This is the entry. Can you all see the entry? Above 200 MA, go outside the band, then now come back in. The whole candle must be outside the band, then come back in. Touch a bit here, not counted. Can? So okay, the profit target is when the price goes above and close above the upper band. Where does it close above the upper band? Let's take a look. Here. Can you see it closes above the upper band here? So you enter here, you exit here. You make a profit of how many points is that? Okay. Is this obvious? I mean, can see or not? Closes above. The candle close above. Okay, this one 2000 over points. Okay, can? Is it this one cannot? If okay, help me type G for go. May get stop out. Let me see. Oh yeah, correct. You may because of the trading stop loss, you may actually get top out. You're not wrong. So you put the ATR here, may have gotten stop out. This is a very good point. So again, which is good lah. So again, we must do POT. So if there are times where you may get stop out, don't be shocked or surprised. Oh, how come like that? This one obviously very difficult to go in. Okay, so up down. This one not really the best. Okay, let's look for other entry points. Again, this one. Okay. Oh, this one also gets top out. Okay. So you must understand this one is a trend following method. This one is a little bit more like the total trader kind, where once they will make a lot by going up, but don't get stop out in the way lah. Okay. I mean when how to make sure don't get stop out, there's no way we can make sure one. So after putting the stop loss, that's it. We just go for it. Okay. So this one is another place that we can see. Can you see? Get out of the band. When they enter, okay, that's where you enter. Depends on ATR lah. Okay, then you actually can go all the way up. Okay, we may need to adjust the ATR. If let's say after a while we keep getting stop out, we say, hey, but actually based on average true range, probably won't get stop out. Because you can see the past 14 periods is quite a lot. So probably your ATR will be quite low one. Your stop loss will be quite low. So you enter here. When do you exit? Okay, actually here you may exit already because it closed above the band. Okay, so we can adjust accordingly. Okay, can So this is actually called envelope lah. So envelope, it works like a channel. If we cross outside the channel, you buy, and expecting it to come back into the channel and then ride up. Okay, because of the 200 days moving average. Can So in, out. Then after that, here don't have already. Here don't have. Okay, can? So okay, now we have a 6 strategy already. I'm gonna do a very quick review before we go for a break. Okay, so in fact, I mean, for those who need to go for a break, you can go for a break first. I'm just going to do a very quick review of these 6 strategies. Okay. Okay, so strategy number 1 is the golden cross. Golden cross works like this. Every time the 20 cuts 50 and then above 200 MA, you can enter. And then when it cuts back down, you exit. The second one is parabolic. Parabolics are, okay, above 200 MA, when the parabolic side is on top, change to below, it pushes the price up. Okay, when it changes back on top, it's going to push the price down, you exit. Okay, third one is Ichimoku. Ichimoku is the Japanese cloud. So Ichimoku, the price, this one, sorry, you see already the eyes a bit pain. But the price must be between the ozone layer, which is the skyline, and also the cloud. So it's in between. When the red cut the blue, that's where you, red cut blue, you can enter already. Red cut blue, you can enter, and then ride all the way up until it converges, go outside the ozone layer, or the red cut back the blue. Okay, in fact, a lot of times it cuts above the green color line. You can get out already. Okay, can? The fourth one, total trader. Total trader, 20 days breakout. Calculate 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 20, draw a line. When it breaks out the line, you will enter. And then continue right up, and then continue to monitor the 20 days high and 20 days low. So the whole entire box will keep shifting up and down, up and down. Okay, it will keep shifting up. Then when it crosses down, then that's where you exit. Okay, then the final one we talk about is envelope. Alligator. Alligator, when the mouth close and then start to open. When the mouth close and start to open above 200 days MA, MACD goes into positive, enter. When the mouth open and then close back again, then you actually exit. Okay, then open again, you enter, close, exit. Okay, so this is open and close alligator mouth. And finally, strategy number 6, go envelope. Go envelope, we just went through. Above 200 days moving average, outside the band. When it goes outside the band, you enter. Okay, sorry. When it goes outside the band and then it goes back into the band, you enter. And then you exit when it crosses outside the higher band. So same thing. Here, they go outside the band, go back in, then you enter. Then when it goes out the band, exit again. We can see a lot of times, right? Actually, they can go a bit higher, right? We can adjust the standard deviation. So we do POT lah. Okay, can? So okay, great. This is the bull strategy. For those who cannot take it already, you can go and take a rest. I'll send you all the video anyway. So we're gonna take a 5 minutes break. 5 minutes break. We come back at 10:50. Can 10:50? Yeah. In the meantime, ranging, I still got 20 strategy lah. Wow, a bit shy already. Okay, no, just kidding. I'm young and I'm fit and I'm energetic. So for those who haven't downloaded MetaTrader, you can go and download. It is a free software. And then later I show you MetaTrader, very cool one. Wait yeah. Ask question first Hey, go 10:50 we will continue So those who want to ask question can ask question. Why am I talking about? Okay. So if let's say we have a principal of 1,000 and we reach 2%, can we open multiple trades? Yes, you can. Okay. Judy is a very good question. So the rule is this. I love this question a lot because about risk management one, seldom people ask that much. I really like it. So 2%, super awesome. Risk per trade. I share with you all fund management how they do okay? Fund management, all the hedge fund per trade Okay, so this one is the key rule. Okay, so each time, okay, the principle is this each time max risk 6%. So i.e. 3 trades 3 trades. But one of your trades, right? Okay, remember so you can enter 3 trades and then each one risk 2%. Let's say when one of them, okay, start to win. And then you add a trailing stop loss, correct? Trailing stop. And then inside profit already. Okay, correct. You understand what I'm talking about? You enter, then the price went out already, then trailing stop loss. So you know that even if you can stop out, you also make money. Your 2% risk is off the table, correct? Then that's where you can enter another trade. Does it make sense or not? Okay, enter new trade. So then you can have 4 trades already. If let's say 3 of them all go up, then you're just like trailing stop, chasing after them to see how much you can make. Then you can enter another 3 trades. Okay, is this clear? Does it make sense? I hope it helps. MT5 is real time. Download the Windows or the Mac. Okay, why must set at 2%, right? Okay, this one I also like this question a lot because you are like me, so inquisitive. Teachers will feel that we are very irritating, but we are inquisitive. Okay, there are few. Okay, so all these things that we talk about, right, is all backed by data. So there's this book called Trade Your Way to Financial Freedom. Okay, it's by Dr. Van Tart. This one, passed away already. So in this whole entire book, after you go and read, you will realize that this book, right, it talks about the position sizing. Okay. Tell me about Trade Your Way by Van Tart. So very quick summary, Van Tart. Okay, so it's a very personalized book, those kind of things. They got R multiples. Position sizing is the key emphasis on the book. Okay. Okay, they call it the F ratio or something like that. I can't remember the key thing. Expectancy, okay. But anyway, why is 2% the amount to risk? Okay, so Dr. Van Tart actually did rigorous study and they actually calculate if you lose 2%, 3%, so they do optimization. If every time you lose, the win rate is 1:1, then they keep calculating every time, right? And then 2%, right, it is the most optimal. It's the most optimal. If you risk a bit more, you may wipe out your account. You risk a bit less, your account don't grow as much. So I mean, to really understand fully, you can go and read this book. Okay, but this book is a lot about statistics. Let me see. Got sample pages or not? Actually got this Trade Your Way to Financial Freedom. You're going to watch this. This one got the summary. I also like to read all the summary. Okay. They always talk about the risk. It's about a lot about risk management. Cannot. Wait. Hang on a minute. Let me see. I send you all this link. Actually it's not BC. The 2% rule is for everyone. It's regardless of it's not about your risk tolerance. It is about if you are a seasoned trader and you actually do backtesting and you have done statistics and data point, you know that 2% is the specifics. Okay, another if you don't use 2%, you can use Kelly criterion. Okay. Okay, wait. How does it compare to Kelly? This one is by I wouldn't say it's risk tolerance. It's actually mathematics. Okay. It's about a lot about risk management. 2% is very, very simple. The Kelly criterion, there's one whole book which is on my bookshelf, which I haven't finished reading because it's really very hard to read. Okay, you can read this book, Kelly criterion, Edward Top. It's like a textbook, yeah. Well, that one really not easy to read. This one. I got this book. Well, this one is really I don't know, like a university model. Can okay, okay. Hey, 10:50 already. Yeah, I'm gonna continue. I'm gonna continue. But the good news is this. The good news is this. So the good news is okay. The rest of my other strategy. This one is the bear system. Okay, bear system. So this one is actually okay. The reason why I also talk about bear system because it is a bit different one. So I'm going to compare a few. Then I'm going to move on to the reversal already. Okay. So bear system, right? Remember initially we got this thing called the golden cross. Golden cross, right? Now golden cross is for uptrend. Uptrend. It's all bullish. Bullish means we buy first, make money, then we sell. Buy, then sell, then make money. Buy, then sell, then make money. However, for this particular bear system, right? Because market goes down, it doesn't always go up, correct? And you all make a guess, when it goes down faster, or when it goes up faster. Which one is faster? Down or up? D or U? What do you think? Down is faster or up is faster? Down. Actually, not true. I calculated based on data again, it is quite similar. It's quite similar. It's just that when down at time, right, people a lot more scared than when they make money. So you can go down by 20%, you can go up by 20%. Go up by 20%, you feel very happy, but go down by 20%, the kind of fear and scariness you feel is a lot more amplified. So sometimes it's good to have bear strategies. In case you see your whole portfolio turning down, you can execute bear strategies to make money in the downtrend to really eliminate your fear. It doesn't really go down faster than much because when we see up, we also see gap up. Okay, it is a human psychology more than data point. Okay, people say climb the stairs and jump out the window, right? Again, I like to go and do all these data point, and it's the experience seems faster, but it's not really faster. Okay, can elevator go up, go down. Okay, so okay, so bear strategy. Let me share with you. So death cross is actually opposite of golden cross. So okay, what do I mean by that? Okay, so we do a very quick one, then the rest will be quite similar already. Then we can go to reversal. Okay, so okay, I share with you. The first 6 strategy is all bull. Every bull strategy there is a bear strategy. So okay, example this one we use for okay, this one also can. Now simply put. Okay, since our last strategy is golden envelope, we talk about golden envelope first. So golden envelope, there's a bear strategy. When do we enter gold when it's bear? It's very simple. Let's see. The indicators is all the same. So whatever that we use just now for the golden envelope, we can use for the golden envelope bear. So now is when the price is below 200 MA, and then what happens is when the price goes above the envelope. Okay, just now we mentioned when it's above, when it's going up, then below, close outside the envelope, then we enter here. Correct? Remember or not? This one is bull. Now bear, we go opposite law. Bear will be here already. Okay, bear will be here. Can you see? Price is below 200 MA. When price is below, it is called what trend? Everybody, what trend is it? When price is below 200 MA. This one very important because we don't trade against the trend. When it's below, it's downtrend, correct? Downtrend. So okay, so downtrend. Another few things that we may want to add to our success, right? It is when the price is nearer to the MA, then you enter. If it's very far, here also can enter, but you know that it's really very far. So when it's nearer to the MA, nearer to the moving average, it acts as a support and resistance. So if you enter here, you see, you also go outside the what do you call that? The upper envelope, right? Go outside the upper envelope, that's where you may not make money. Okay, you may even lose here. But here, actually not really. Go upper envelope, down, here, close. Break even. You may break even here. But you should enter here. Can you see enter here? Price is below the 200 days MA, which is downtrend. Then it actually close outside the upper thing. Okay, why do we want it to close outside the upper thing? Because we say that it will draw back inside the channel, right? So we can enter here. Okay. So, sorry. Once we see this setup, we can enter here because it goes back in already. When it goes back in, You all see this cute little cross, right? This is called doji. It's not doji as in like this method very dodgy or what, but it's actually called doji, Japanese candlestick name. You enter here, and then when do you exit? You can exit here. Very short time frame. Exit here. So any other things? Okay, here. Near the 200 MA, they go outside the channel and enter here. Then when do you exit? Let's see. Okay. Enter here. I can exit here. Can you see? So it's a bear strategy. Okay, can y'all see? Every bull there's a bear. If okay, help me type B and B. Bull and bear. Okay, bull and bear. So okay, maybe all this I don't go into much details because you all already know how to set up the indicator. You all know that it is just opposite. Okay, so price below 200 MA. This one is death cross. Death cross is opposite from golden cross. Is using MA. Then we also have parabolic, which is also opposite. So price is below 200, and then after that it is all the opposite. Is it okay? This one I will just send you all the slides, then you all go and read through. So and then go and practice. Practice. But personally, I somehow my bear strategy doesn't work very well. For me, I'm a better bull person. Okay, can So this one I don't want to waste your time because the indicators is the same. Indicators is the same. Can Okay, so all these I'll send you guys. All the death cross parabolic. This one is Ichimoku bear. So now the clouds is on top. So now it's below. It's dropping down the sky already. Okay. So okay. Then after that, turtle also got bear. Okay. But turtle trader, right? I'm not too sure because this one I actually read through. I've seen through. I didn't see much of the turtle using the bear instead, but I do see people using it. But the actual turtle trader, I'm not too sure whether they use bear. Okay, just to share with you guys. Alligator, same thing, bear. Okay, great. So same thing, POT. Okay, POT is position size, optimize, and then backtest. Just to give you guys a very quick sensing of MetaTrader 5, right? So MetaTrader 5, this is one of the program that I actually teach, which is called quant trading. And later I want to share with you all how all of you all have a chance to access to it. Okay. So for those who are quant traders, you are inside there, of course, definitely you all will be going through the mastermind with me. But for those who are very, very new and you do like all this, right? Let me show something that's very, very impressive in MetaTrader 5. So very quick sneak preview. But if let's say you can know how to use it, go ahead and test it out. Okay. So can you see right here, right? Okay, you go to view. Can you see this thing called strategy tester? If you all can see, how many type? ST. So we are people who like to do back testing. We like to back test strategy. So we are BTS, back test strategy. Okay. So strategy tester, you click on it, right? You can actually set the inputs. Okay. Sorry, the settings. So example, you want to test gold, and then you want to test whether the 200 days moving average. Okay, you want to test golden cross. Okay, this is the part that will be a little bit trickier. It's called expert advisor. But for those who have attended some of our AI quant trading, right, you know that we use ChatGPT to write on. So we don't really write this ourselves. We just give ChatGPT this PowerPoint slide. I'm not kidding you. You give ChatGPT this PowerPoint slide. Example, golden cross. Give them the PowerPoint slide. Turn it into an expert advisor. They will help you create. Okay, may not be always totally 100% perfect the first time, but you go and check a few times can already. Okay. So example, I'm going to test out Gold USD and stuff like that. Let me show you guys how amazing this is. So okay, after all this, right? Okay, custom period. I want to test maybe this year 2004. Wow, this one I tell you, this one is damn amazing. This one, never mind. Next time let me talk about it. Okay, so delay. Sorry, a bit delay. Okay. So this one usually I'll use the last ping, my server's delay. And then you can see everything else is here. Leverage, just leave everything as per normal. Okay, you can optimization disable first. So they will help you backtest. Okay. So after they backtest for you, right? Okay, after they backtest for you, they will tell you your results and things like that. Okay, example, you click already, this is the backtest result. They will tell you what's your net profit. The cool thing that we want to look for is the Sharpe ratio, expected payoff Sharpe ratio, these two things. Okay. So okay, this one we go both long and short. How many long trades won? How many long trades lost? Can you see it is 94%? 94% winning trades. Can you see that? Would you like to have a 94% winning trade? With a Sharpe ratio that's 2.16, which is actually means that this whole entire equity moves up very smoothly. This is the profit graph. You keep making money, keep making money. Okay, so this is using MT4 and using the golden cross. It's mainly using golden cross. After that, right, when you can use the optimization here, optimization, right? Optimization results, right? Let me show the most amazing thing. Okay, can you see optimization results? This they go and test out, right? Okay, let me show this. I don't know whether can you all see. Is it the mouse a bit small, but I want to share with you. This is something that I would love all of you all to understand. There's 4275. So there's 4275 possible permutation. When I ask them, hey, I don't know the golden cross, right? Should I use 20 MA and 50 MA? Or should I use 21 MA and 52 MA? Or maybe I use 17 MA and 53 MA. Which one is better? Go and optimize. Then they go and optimize for me 4,000 permutations. And then you all guess what's the best MA. You can see the MA period, MA shift. They test 17 to 111, 17 to 113. So they keep testing, test 4,000 over permutation. Let me show you this. Okay, the results actually go for the best one. Okay, wait. Okay, this is the worst result. Wait, okay, can you see this is the best result? Best result. I use based on Sharpe ratio, but I can use based on the highest win rate. We can test different things now. The best MA crossover for gold for 1 hour is 11 and 34. 11 and 34. You all can write this down. It's 1 hour, 11 and 34. So you want to do MA crossover, that's the optimized one. Now, this gives me, I ask you, if you can test 4,000 different times over like multiple time frames, will it give you a lot more confidence to invest? Definitely, right? Otherwise, this guy say this method is good, but got test before or not? So for me, I like to go and test. So same thing, the envelope one, I can give the specific rules. Every time cross. I want to see how much I can win. How much I can win and also how much I can actually optimize. That's a key thing. Because every variable, I told you guys POT. Can you all please type POT? Yes. Yes, Michael. After I do everything already, can you see this thing? Algo trading, click. Trade for me. Okay, so after that, I can go and sleep already. I don't need to 1 hour every day wake up and check. They will check for me. So this is things that if you're interested later, I'll share with you all how you can get access to it, and it will be a gift for all of you all. Okay, Ken? Just to tell you guys, wow, sometimes you all, so many things. Actually, got even more things, but more things will make your life better, okay? So quick, just a quick commercial break before we go into reversal. Quite interesting, quite interesting. Okay, so I want you to treat all this investing and trading, right, as like treat it like a hobby. If you treat it like your life and death, next month you may have to make 1 million. You'll be so stressed that cannot trade very well. Okay. So for me, I learned to initially I traded because of money. After a while I realized, wow, very amazing. There's a lot of ways I can use to win, better win this whole game. Okay, which I want to share with you all. Okay, so we can all win together. Can you can just click and then auto trade. Algo trading is just basically auto trade. I don't know why they call it algo. The algorithm is based on the set of rules that we put in. But I tell you, okay, sorry, I show you one more thing. Just now what I show is optimization, right? I show something which I think will blow your whole entire brain. Okay? MT5 got complete optimization, which is what I show you. Can test 4,000 permutation. They have this thing called forward optimization. Do you know what it means or not? It means that as it starts to trade for you, it continue to optimize. It's not just optimized based on past data. It optimized based on forward new data. Oh, this one is like I realize a lot of people who use MT, they also don't know how to use all this. But you must learn all this. This one, you want to really make money, and it's not difficult, it's just click a few buttons only. Okay, but you must understand how to operate it. Okay. How many of you feel excited? Yes. Yes, MT5, as long as your brokerage can use MT5, you can use already. You can use any brokerage. I don't know a lot of brokerage, I'm sorry. So whichever brokerage you use. So there is this one you're going to find out from the brokerage. But a lot of the brokerage, I was talking to some of the brokerage people. I tell them, hey, I can do all this. They also didn't know. I realized they also never trade one now. Okay, but don't worry. Okay, come. We go for reversal. Then later I share with you all how we can all do all this live trading together. Can Okay, come. Okay, reversal. Strategy 13. Okay, this one is called RSI bullish divergence. Have you heard of this before? It's a very classic method that a lot of seasoned traders like to use. This one, it is not easy to find, but when you find it, it's highly accurate. This one is really highly accurate. It's called divergence. Okay. Algo trade software itself need account. I mean, if you want it to trade, then you do have account, then what does it trade? As in, you can put in $50 for it to trade. So there's okay, later we talk about it. We go for strategy first. Okay, so RSI bullish divergence. So what we use RSI. The time frame is 4 hours, 1 day. You can use shorter time frame also, but this one can be quite fast. Can be quite fast. If it's too fast, you may not be able to enter exit because this one needs a little bit of discretion. So it is not totally. This one can automate, but your algorithm must explain what is divergence to the RSI. Okay, so the indicator you use RSI. Okay, so let's go through. Let's go through. So I was using Euro USD. Okay. Let me clear the indicators. Euro USD 4 hours indicator list. Oops. Again, I do hope that you all see this as something fun more than like wow, die need to make money now. Okay, then you're the easier to make. Okay, because when it's very stressful to try to make money again and again, wow, I tell you, may not be so easy. Can So let me go insert indicators, oscillator, Then here got this RSI. Oops. Can So the period is 14 days. Power outrage out. Then you must short the Microsoft stocks. No, I'm just kidding. I want to buy the stock already. I like this kind lah. The Microsoft got problem. Then after that the share price drop. Then that's the best time to buy. Okay. So okay, in order to understand RSI, the divergence, right? Okay, so now same thing got good, got bull, got bear. So this one, right? I explained to you, right? This one it is a bullish divergence. Bullish divergence, right? You need to do a few things. Okay, you need to look at the top of the you need to look at the mountains. What I call the mountains. So the mountains is this. The price right now, we don't have 200 days moving average, right? So right now, can you tell me the price is uptrend or downtrend? This portion. One simple question. No, not trick question. Just to make sure that we are all aligned. Okay, so uptrend, right? But how do we know it's uptrend? We know it's uptrend because we see a few things together. The things that we are seeing together, right? Okay, so this is the portion. Can you see this is the mountain top, mountain top, mountain top? You try to find a way to connect the mountain top together. You will see that the mountain top is getting higher and higher. So they call this higher highs. Okay, higher highs. So you can see the prices are making oops. Oh no, this is a bullish lower high. Oh, I'm so sorry. Bullish divergence. We go for downtrend first. Okay, wait. This one later we come back to it. Okay, downtrend. So, sorry, downtrend. Downtrend, can you see that the mountain is getting shorter and shorter? The mountain is going down, down, down. So this one is a downtrend because what we want is a reversal. When reverse uptrend, then we go in. Okay. So this is called a lower high. Lower high. So again, I come back here. Prices are making lower high. The highs are getting lower. Same thing. When you go and drink alcohol, you feel very high. After that, get lower and lower. Okay, not related. I'm sorry. Lousy example. Okay, so lower high. Now this is called downtrend. Can you see the RSI? RSI here, right? They also have all these mountain one, and their mountain is in correlation to your mountain. Okay, so as we draw this price downwards, we also draw the RSI. Actually, okay. So RSI maybe from here. This is the top. This is the top. Okay, this is going down slope, right? This one is going down slope. So this one, there's no divergence. Okay, no divergence means everything okay. So this one, no entry, no entry. Okay, I try to look for the one that got entry one. This one not easy to find, okay. Oh, this one I also find some time. RSI is relative strength index. Cross strike. All these are solid. Give me some time to find. Okay, so you see price goes down, RSI also goes down. Oh, okay, we want to find, what I'm trying to find is a situation where the price is going down, but the RSI is going up. Okay, wait. Let me see whether this one have or not. Okay, I did do a few screenshot when I was actually preparing for this. So, but let me use a screenshot first. Later we continue to find. So when the price is going lower and lower, but the RSI is going higher and higher, it is called a divergence. It means that it diverged already. A divergence means, right, the RSI is behaving differently from the share price. So the RSI will tell you that the share price won't continue to move this direction. It's going to change in direction. So this one is a signal for you to say that it is time for you to go in. So you can enter long when the price break resistance. Profit stop loss 1 to 1. Okay, so let me show this. Okay, I managed to find this. Euro USD 4 hours. Can you see that the price is going down, down? So generally it's quite obvious that it's going down. So you draw a line all the way across, and then you can see that RSI, when you connect, right, is going up. This picture can see not? Later we try to find one. Okay. Now, when this happens, right, when price going down but RSI going up, we get ready to buy. When do we buy? We buy when you must draw this trend line down, when the share price breaks when the share price breaks across this portion after the RSI divergence is seen, right? That's where you enter here. Okay, it's a reversal pattern. Got it? Can How many of you use this before? If you have done this before, you can type me and also can share what's your experience in it. This one, so far, some of my very seasoned traders, last time I got a very good friend who actually used this mainly, and then he trade for I think 20 over years. He's okay, he used to be a broker also. Then he quit broking, then he just do this full time. Now in Australia already. One of my good friends. Okay. So Jefferson also uses this, is it? Okay. So this is but not easy to find. It's really not easy to find. When this setup is very obvious and done, wow, it is a very good profit, okay? So you actually chunk all the way up, and then you can okay, your profit target is when MACD, RSI, all the oscillators, when there's a divergence with the main share price, right, is a very strong signal. Okay. Wait, let me see. Bullish strategies applies to uptrend. This one is not bullish. This one is a reversal pattern. But when I say bullish reversal means that we are buying one. Later we do one that we are selling one. Got it? Yes, MACD can also use divergence, the histogram. Were there two false breaks up before the real breakout? Here is it? Are you saying here? Okay, but here they haven't diverged, correct? This one forms the next high for it to diverge, correct? Divergence. Maybe you're saying here is the breakout, is it? Maybe can have a breakout, then you remember to put a stop loss. The stop loss is here. Okay, then your next profit target. Okay, again I'm glad that you all asked this because there's no 100% one. There's no 100%. It's only high probability. So after you enter here, okay, the recommended, depending on your okay, once you're a very seasoned trader, right? Correct me if I'm wrong. For those more seasoned one, more than maybe 3 years, 5 years, typically you don't really like to set too much of a profit target. You like to let your profits run. If you all agree one and then you really actually do it one, you type A. This is typically the way because sometimes really the profit run is the one that makes you a lot of money. Okay, it can makes you what? Because when the market reverse chong up, right, it really chong a lot. But again, we talk about trend. That's why the first strategy I like to teach is the trend following one. Trend following one, when it keeps going up, I rather put a trailing stop loss and do it. But the profit target, because you say that, hey, I don't know whether you'll come back down, it can be very discouraging. Wow, keep getting stop out, then keep getting stop out, then no profit. It can be very discouraging. So sometimes if you're very new, you can set a profit target. So you once you enter, set a profit target near the previous resistance. Then you can like exit here when go near exit because it may bounce back down again. Okay, so this is called divergence. Okay, so this okay, so divergence again, let us try to find one at least find one. Don't give up. Okay, when did I manage to find this? You see basically you see the price and the RSI. Someone mentioned MACD, right? I'm gonna add MACD in. But most of the oscillators, they move similarly one. Can you see? Move similarly one. So the price go up, RSI go up, MACD also go up. Can you see? It's very similar one. High, then this one low, then this one also lower. This one also lower. So it works very similar. Got it all? So let's see whether we can find one. Just one. Come on. Don't make me lose face. Just I should capture the time frame that we were doing just now. Here have or not? Down. Not really. Not very obvious. There's a scary part. Sometimes it's not obvious. Then you try to see until it looks obvious. Seasoned investors know what I'm talking about. Okay, well, this one really cannot find. Let's see. This one moving down. This one. I don't want to force things. I don't want to force it. But you can see that example. You tell me have or don't have. This one is going down. Okay. Then this one is not really, right? Not really lah. This one is a bit flat lah, but not really. Okay, we want it to be like, wow, this one going up one. If this one higher up, okay, then even better. Got it all. The MACD one, I don't really know how to use this per se lah, but again, but you can see that this one is actually on the downside already. Okay, maybe we can learn it the next one. Okay, but you understand if let's say this one is actually obviously going up one, but this one not this one is really not okay, this one is going down, this one going up. Then when it breaks, then that's where you can enter, and then you can ride the uptrend up. Got it all. So this one is actually divergence. Divergence again, not easy to find, but once you find, it is pretty accurate. should be comparing the low point. Oh, okay. Expand RSI will be clearer. Wait, hang on. Wait. So I want to share with you. Okay. So we are talking about downtrend, reverse up, right? You look at the high. So you draw the high. When you talk about uptrend, this one have or not? When you talk about uptrend, okay, uptrend, you go to the bottom. Uptrend. When it's uptrend, you draw the bottom. This is for divergence purely. Of course, you can draw channel and stuff like that. This one is going up. You want this to go down. Okay, not want this to go down. If you notice this one is going down, this one is not. It's really not going down. This one. This one is also going up. But if it goes down, then there's a divergence. Then after that, when it breaks, that's where you can enter. And then it goes. It's supposed to go down. But there's no divergence. There's no divergence. Got it? So this one a bit hard to find. But I've draw some examples for you. If you all can find it, then we can actually enter some. But you can see stop loss will be the previous low, and then profit target will be the previous high. But again, I prefer the profit target to be trailing, trailing stop loss better. Can? Divergence works when RSI is below 30. Is that so? Oh, you're talking about the uptrend, is it? Okay. But this one is more of trending already if it goes below 30. But again, depends on your strategy. It may be a bit different from what I've been using with my that friend of mine. He trade until financially free, no need to do work already. But he used divergence only. But he told me he's super patient. Maybe 1 year he only got a few trades. But each trade he go in big trades. Sometimes will lose a bit, but most of them big trades. Okay. So this is possible. Can So this divergence. Okay. Next one. Okay. I still got I'm okay, 5 more only. Oh, exciting. Okay. the rest of all these, right, becomes easier. Got some very easy to use one. Are you guys ready? If you're ready, help me type 15. Okay. Okay. So Heikin Ash. Okay, I don't know how to pronounce. Aishi. Okay, Heikin Aishi is a candlestick to smooth out the data. It is all these quite interesting one. The Japanese they come up with all these indicators. So you use Heikin Aishi and also RSI 14. Which one is 14? Oh, 14 is this one. 14 is RSI bearish, 13 is RSI bullish. Okay, it's two strategy. It's actually one strategy but two direction. But this one is useful depending on the trend. Okay, depending on trend. But okay, again, this divergence typically works better in a bigger ranging form where it goes down, then you need to go back up, goes down, go back up. Okay, so this is how it goes for divergence. Do you use for the big trends itself? According to whom I learned from, he didn't. He used more for ranging, and he also told me that 50% of the time the market is ranging. So 50 to 60% of the time the market is ranging. That's where he finds his entry and exit point. Okay, Ken? Now, let's go for 15. So there's bull and bear also. So this one, right, is a very interesting asset class. I mean, sorry, indicator. Let's use gold. It changes your candlestick patterns, candlestick colors. Okay. So this one, what am I using? Let's see. This one is a USD, right? Euro USD. Let's go for the gold. So gold, time frame daily. But from what I understand, this one can also go shorter time frame. I mean, because a lot of y'all interested in shorter time frame. Any of y'all are day traders, meaning you say you buy and sell within a day one. If you are, you can type D. Okay, it's all about preferences. For me, I don't really do much day trading last time. Now I use my auto bot. Click, ask them to go and trade for me. Okay, can. So now here, where is it? Let me try to. Okay, here. Okay, here the particular indicator is here. Can you see? Heiken Aishi. Okay, if you're Japanese and you know how to pronounce it correctly, please let me know. It is on this panel. So this panel under indicators. So they okay. By the way, I just share with you all one more thing that's very interesting. Before I go into this Heiken Aishi. Okay, this one itself, right? Okay, if you look at my mouse, right, can you see this thing called market? If you can see market, how many type M? Okay, so this one, right, you can even click on the market. And then there are other indicators that people are selling. You can also go for the free ones. Go for the free ones. Make sure you go for the 5-star ones. Okay, go for the 5 stars ones. So there's like free go MT5. No, there's nothing to lose to go and test it out. And then after that, you can actually download. So download already. You can go and do back testing to see whether it actually works. So these are things that I like to do. A bit no live. Shouldn't tell you what I do. Okay. But just to share with you guys that there's a lot of things that y'all can get it from. So I know that some people you also buy indicators from somewhere. I also bought before lah. Some of them work. Sometimes the free one also not bad. It's quite funny. Back testing. Okay, that one really takes quite a bit because you need to write the script. So I later I go through with you guys what is going to happen next. Okay. Okay. So come back to here. Come back to here. Okay. Heikin Aishi. Go back to this portion. This one is go. Okay. Allow modification for signal settings. All this. Okay. Now, can you see that immediately my candles change to blue and red? Blue, red, blue, red, blue, red. So this one, they automatically detect for me what is the trend. Is it downtrend? Is it uptrend? It suddenly becomes clearer, right? Okay, so it makes the, okay, they use both volume plus the direction of the candles to show you uptrend or downtrend. Can you all see? Can you all see the uptrend and downtrend? The blue is uptrend, the red is a downtrend. If it becomes a lot clearer, right? How many type C? So when do you buy? You buy when it becomes blue color, then you sell when it becomes red. So this is the whole idea of this particular method, which I personally find quite amazing. It's like, wow, it becomes clearer and there's no dispute. There's no dispute. Okay. So for example, the latest of the latest blue red already. So red you can buy. Okay, obviously there's false breakout. There's no 100% guarantee. Okay. So it's a very powerful method. And then we combine it with RSI. RSI. So RSI, I'm going to add this in. A lot of investors, traders like to use RSI only also. So RSI, right? How do we combine these two? Because one indicator by itself is never complete. Even two also never complete, but increase the chance. So, okay, you can see, so to buy, we talk about buy, is we buy when it is the blue candle, correct? Or the blue candle. But sometimes the blue candle also goes sideways. When do we buy? We buy it when the RSI is below 30. So when RSI is below 30 and they move above 30, plus this in the same vicinity, about 3 to 4 candles apart, the candle turns into bullish trend, meaning you say turn into blue color. That's where we can buy. So let's see. Example. I only talk about win rate. Percentage profit and expected payout, you all can go and test it out yourself. Okay. And it also depends on but okay, those that we are talking about is positive expected payout. Positive expected payout means, right, the percentage of your winning rates multiplied by the number of how much you win minus how much you may lose, right, is a positive thing. So profit factor is more than 1. Okay, I don't know whether you understand what I'm talking about. Okay, so all this, it is a higher probability of winning plus expected payout. Means that if you keep using this, you cannot use it one time. You must use it like 10, 20 times. Over time, you will usually win. Okay, I say usually because I also don't want to say 100%. Okay, but typically if everybody is winning, then unlikely why suddenly you use then lose. Okay, now can you all see? Okay, so the best way to find this particular setup, right, is using RSI. Because RSI typically will range between 30, can you see 30 and 70. So when it crosses below 30, it is a potential time to possible enter already. Because RSI below 30 means that it is oversold. Too many people sell already. It is time to go back up. So when do we enter? We enter when RSI is below 30, cross back up above 30. Can you see here? I hope it's obvious. So when it's cross back up above 30, from 30, cross back up, right? Below 30, cross back up above 30, and the line from red turns to blue. This is the entry. If y'all can understand this portion, how many type H? H for the Heiken Aish candle. Okay, so this is a entry signal. Okay, when do we exit? We can set profit based on recent resistance level. Again, because it's not reversal, sometimes it's ranging. So here we enter here. This is the resistance level. We can exit here. Very short time frame. Enter here, exit here. Then the stop loss where? Stop loss here. So if you lose this distance. If you win this distance. It should be quite obvious that the win-lose rate is to our advantage. Okay, it at least should be 1:1 because by the time you enter, maybe it's a up candle already. Okay, you lose here, or maybe slightly higher I don't want to be biased. You enter here. If you lose, it's here. If you win, it's here. Got it? Sorry. How come you never enter at earlier lows? Here is it? Is it talking about here or here? No, because RSI didn't below 30 Can see? Oh, it is actually based on volume. So some of them, the color not totally equal, right? It means that the bull and the bear, it is like almost equal. Is that what you're asking? Like why I never enter these two? Is that what you're asking? Oh, okay. Because RSI ma, can you see RSI? Didn't go below 30. Must go below 30, come back up, then you enter. Huh? Got it all. So if let's say everything you also enter, wow, then you keep getting hammer upside down. So you add one more RSI, increase your chance. Good question, good question. Okay. Got it all. So that's why you all see importance of adding two indicators instead of just one only. Got it. But lesser trade is good. You don't want to enter every single trade. Can all? So profit target is here. Then stop loss, you can again, like I mentioned, below, okay, at the bottom here, and then trailing stop loss also. Okay. So sometimes you like to let it ride, then you let it ride now. Okay. Because sometimes you can see, wow, big uptrend, then you miss it out. So sometimes you put ATR, then goes up. If it triggers here, at least you make more than just here only. Maybe probably you make somewhere here. Can all? Will value investing buy to close? Okay. So whatever that you, this is a very good question. Sus. Wow, you see, I'm very encouraging. Every question is a good question now. So now for value investing, right, we go in even deeper. So example, you can see Apple, Amazon, all this. We look at fundamentals, then we use technicals on top of it to go through a better entry point. So it is good company, it is undervalued, plus you use this indicator, isn't it even more powerful? Your chance becomes higher and higher and higher. For us, when we go investing and trading, right, we want to make sure we got advantage, we got an edge. So every single thing that we add to our particular, I would say trade setup, right, it increases our chance of winning. There's no 100%, no 100% one, but it increases chance. So when we go inside there, confidence higher. But even confidence higher, we still do POT. Can you all please type POT? Position. Then we optimize backtest, and then finally we trade. Okay, got it? So this is the bull. The bear is the opposite. Bear is opposite. So strategy 17 is bear. Okay, the bear is opposite. Very simple. So how do we look for the opposite trade? We look for opposite trade around here. Can you see 70? When RSI is above 70, that's the best time to eyeball and see is there any potential. This one on high side, very easy to see which one go down. But we look at RSI, this one haven't 70, cross above 70. Okay, we see whether got some losing trades to see. Okay, can you see this one above 70? Above 70, blue line. Pop, pop, pop. This one is red. Can you see not? Above 70, then cross down already. Did it cross down? Cross down already. You probably will enter here. Okay, we'll enter here. Enter here, then lose already. Because why? We will set a stop loss here. We'll set a stop loss here. Then maybe we'll set like a trailing. So this one probably lose. So it's not always win one. Let me zoom in a bit for you. Did I? You know what I'm talking about? I don't want to keep showing you all the win one only. Okay. Here. So 70. Above 70. Cross below. Then from blue, change into red. Okay, this one can enter. This one can enter. Enter. Then you put a stop loss above here. Well, quite far. So if you put a stop loss here, if you enter here, and you put a stop loss here, make sure these losses, if you lose, is how many percent, guys? Trading view. I believe a lot of the other platforms also have one. You can go and find. Okay, it is not only for MetaTrader one. Trading view, you can also go and code your own things. Okay, can. But later I share with you all one advantage over Meta over Trading. Trading view got advantage. MetaTrader also got advantage. Trading view I think a lot easier to use. For actually okay after a while you use both. Okay. So anyway, when you enter here, it goes down, 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 down. You put a trailing stop loss. Probably you get stop out here. So you enter here, you stop here. You make some profit here. Got it all. So for the what do you call that? Bearish one, right? When we want to sell, we look for all this. RSI above 70 goes back in. But haven't totally changed. This one unclear. Maybe here. Enter here, goes down. Then probably you get stop out somewhere around here already when you swing back out. Got it all. So you can see this setup is actually pretty good for ranging. Okay, but again, you must wait for RSI below 30, or above 70. This one is quite accurate for this particular RSI plus these candlesticks. Okay, so RSI below 30 goes back up. You probably enter here, blue color, goes all the way up, stop out here. Cannot. Oh yes, high script. High script can. Sorry, I'm not able to show you the trading stop loss now. Because I need to enter the trade, which because Saturday cannot enter. So later we talk about live trading. Okay, enter the trade already. Then after that, once you enter, you can click the trading stop loss. Right now cannot set up. High script can be converted into MT5. So as long as you got ChatGPT, you are 天下无敌 already. You are really, guys, really very powerful. Free version of TradingView now. Yeah. There's a problem lah. TradingView can only have 2 indicators. That's the issue. Okay, I can Hey, so this one I really like a lot. If you all want to start with one strategy for reversal, this is one that I so-called favorite it lah. Hey, but still got a few, okay? So you all see which one you all like Oh, this one is also quite interesting. This one is called NRTR Boo. Okay, NRTR channel, right, is created by this guy. I don't want to go into the history but it's quite funny one. He's actually a very silent trader. You cannot find anything about him. And even this NRTR, right, is his name spelled backwards. His name is spelled backwards. You can go and find out this NRTR. So I show this. I'm quite amazed by this NRTR also. But this one, we also use a bit of trending. Okay, so 200 SMA, NRTR. And this one we can use for all asset class and day. Okay, so I'm just going to use, so I'm going to change this. Okay, take away the relative price. This one is the NRTR one. I really like it a lot. Wow, actually I like quite a bit. So my favorite strategies all I put at the back. And also the golden cross. Golden cross quite easy one, okay? Those in the middle, not say not good. It's just that see sometimes I feel like the Ichi Moku, sometimes the eyes have to see until a bit painful. But good news is they have the green color line can be a forward casting kind of strategy. TradingView got discount. Hey, send your affiliate link lah. This one I allow you all put. Hey, wait, where's my team member? You all can put your affiliate link if you want. Okay lah. For me, I don't really use a lot of TradingView to do all this. My other team members are more expert in TradingView than me. For me, I like to use those that I can do a lot of backtesting. Okay, come back to here. NRTR Boo. Same thing. This one we first use moving average 200. Put inside first. Then we go and find the NRTR. It's my NRTR. Okay, NRTR is under free indicators. So must go and search a bit. Sometimes a bit confusing also, the folders. Sorry about that. I shouldn't apologize. It's MT5, not me. Okay, so NRTR under free, you can see NRTR. Okay, this is very, very amazing. I already find this quite, it's like a breakout systems. Okay, so you can see they will give you all these like entry as you remember the 20 days. It's almost like they help you automate the Turtle Trader. Okay, Turtle Trader we have to go draw 20 days, right? This one it's almost like they automate for us, but it's not exactly. So okay, this one I like it a lot. You see price must be above 200 days moving average. So this one is for bull uptrend. The next one you all know is a bear already Okay, can. So example let me just zoom out a little bit so that we can see more. We go for the uptrend one. Wow, the uptrend so long Okay, so anyway uptrend, but uptrend also must know when to enter exit because in between also gonna whack So you can see very simple strategy. So this NRTR, okay, you all later go and search what is the guy's name. I also don't know how to pronounce. I think it's a Russian name. Okay, very simply put, let me zoom in Okay, can you see when it breaks out then you enter. So when the price close above the NRTR channel, then you enter. This one I really like it a lot because it's like an automated Turtle Trader. You see? Okay. So this is the trend. So they will show you one pump close above already. You enter. Then where is your stop loss? Below here. Then after that, when it continues to break up, then you enter. But it must be above an uptrend. So this one is a very clear uptrend. So this one I want to be very upfront. It's a little bit unfair because we already know that it's a very clear uptrend. But you can see where will you get stop out is here. Break below you sell. But if it's still uptrend, you wait for it. Close above, you enter. Go here. Here, break below you sell. Got it Then this one you enter here, break below, this one you lost. So doesn't mean always one. This one you may also enter, then this one break you lost. So again, the loss must be how many percent? 2%. But this one is going for the up pump, goes up, go up. This one you go out, enter here, exit here. You will enter here. You will maybe exit here because you get whip out. So enter here, then go for the big ones. Okay. So you can see it is actually a trend. This one is actually not reversal. I'm sorry. This one not reversal. This one is trend dealing. So remember I told you guys the Turtle Trader one, right? This one, when I go and compare to a Turtle Trader, adding a SMA 200 gives you a higher chance of winning. Turtle Trader, they make a lot of money, but they have to lose. Win one big one, they win a lot. This one is a little bit more mellow down. So you may win 50, you may lose 50, but when you win a lot. You lose, you only stop loss at 2%. Got it? So it's a very, very good strategy. Okay. So this one also one of that you can favor. Okay. This NRTR by a Russian guy. Okay. I don't even know whether he's a Russian guy. The name sounds Russian. Okay. You'll go and search for it. Okay. Then anybody can search and then write the name down. Yeah, the recording will be available. Almost every day is a good deal until Friday. You mean the trading view? Okay, when do I enter and exit? Okay. So let me show the bear. NRTR bear. So NRTR bear is the opposite from bull. Okay, you must wait for the price to be below moving average. Below 200 days moving average. Okay, once it's below 200 days moving average, you see this dotted line, right? You wait for the price to close below. Then you enter. You enter here. You enter here already, you put a stop loss here. So this is the amount that you are willing to lose. Then this one must be 2% only. Then as it progresses down, can you see? They will help you put the next stop loss on. You just follow. Haven't stopped. Maybe this one already triggered already. Maybe this one, no, this one, sorry, this one is here. Wow. This one will be a solid one, wow. Okay, I think then we will get out here. So you enter here, it breaks here, you enter here, you get out here. So this one make quite a lot, the gold one. So okay, again, a few more things is, if let's say it is already very far away from the moving average, right, you may not want to enter again. This is just some quick tip. So here you can see it's below, moving near moving average already. See, moving near moving average. Moving near the price is nearer to moving average. Breaks here, you enter. Stop loss where? Here. They give you the stop loss already. Then after that, you enter, park, loss. You lose out here. So no, lose out here. You will actually get out of here. But they will adjust the stop loss. You see, adjust the stop loss. So you will lose here. Enter here, because now it's downtrend, bear. Enter here. Okay. Set stop loss here. As it progress up, you can even set a trailing stop but I think unlikely to make money. This one you'll lose, but you'll lose a bit lesser. Can see that? Okay, so this one is quite a powerful indicator. So quite a high probability one also. Or you can use it on gold, you can use it on other asset classes. But this one, what I like is so simple. Can you all see? Do you find this very simple? If you all like this kind of simple one, you can type NRTR. I need to acknowledge that guy. I cannot. I feel that unfair to like just use his name then NRTR founder. It's very funny. Okay. NRTR wow. Trading. They don't have the name. Wow, cannot find it. Okay, never mind. NRTR, right? Did I spell on me? NRTR channel. Okay, wait. NRTR, wait, just channel. Okay, this okay. So NRTR stands for Nick Repok Trading Reverse. His real name is called Konstantin Kopikrin. Okay, so he actually Nick is NIK it's called Nick. Then RYPOK, which is this Repok. So it's the opposite of his real name. Very, very interesting guy but you cannot really find anything about him. But legend says that he's a trader in Russia. Okay, very, very interesting portion. Okay, so this one I think is very easy for beginners. Can also do this. Strategy number 19 already, right? Okay, last one already. Okay. So far later I'll send you all the slides. Okay. Okay, later I'll just quickly like put it in the Zoom, then you can go and download. Okay. Just give me last one already. Last one. Simplest for everybody. Oh, actually for me, the simplest is the one that I like a lot. I like the golden cross. For me, I like the golden cross. And then the NRTR, I was because the reason why I like the golden cross, right, is because I can easily optimize. I can test the different periods. Okay, and the recent one that I see the NRTR and also the high kin Aishi one, right? This one can also optimize and auto trade. So I also quite like it a lot. You just put all the algorithm inside. You must understand all these indicators, they change color, right? It's not because someone is down there thinking is it red or blue. It's all by numbers one. The volume plus the price movement, how much is it? The number, the color will change. Everything that you can actually make into indicator, you can auto trade. Okay, you can auto trade. So this is something that I'm quite excited Ken. Okay. So trading view, which one? Okay. So yes, only this Hiking one, right? I use the trading stop loss of 180. Okay. Only this one only. The rest is 1.5. Correct, right? The rest is all 1.5. Oops. This one is 1. Again, is through backtesting, through backtesting and optimization. Okay, last one already. Last one, in case I hope that it is not confusing, and I hope that you all have gotten value. If it's so far okay, can you tell me frankly, because I know you're very nice. Can you tell me frankly, because I know you're very nice. Tell me frankly, how do you all feel right now? One more to describe how you feel right now before I talk about the last one. Okay, awesome, value, really. Do we need to take profit? Oh yeah, the auto trading all can do one. What's the difference between 16 and 17? One is bear, one is bull. Okay, so RSI. Sorry, did I? Oh no, this. No, this one is price must be below 200 SMA. This one I must make very clear one. Some people may be confused. Okay, now final one. Final one. If you all don't know anything, I share with you just buy S&P 500 This one I don't say it lightly. If you buy S&P 500 you buy this one, I just end this off. Then after I'll tell you all another gift I want to give you guys. Then for those who feel that hey, a lot of value, you want to donate a couple of money to the charity, I'll show you where to donate also. Now I just share with you all one last one. So S&P 500, right? Yeah, I could. Okay, you can use TradingView. You like TradingView, right? You can use Jefferson's affiliate link if you want, no problem. Now S&P 500, you all can see will go up, will go down, right? Okay. Okay. So example, it will go up, it will go down. Then in a year, right? Okay, it will form higher high. Some years it goes low also, right? Some year it go low, right? I'm gonna give you a suggestion. Okay, example this year you can see sideways. Sideways. Can I ask you this? Not a trick question. When is the best time to buy? Okay, let's say every year you say I'm going to get my bonus, then I'm going to buy. Should you buy here? Oops. Like that. Should you buy here at the low? Or should you buy here at the high? Can you tell me, is it H or L? This one is my mouse a bit problem. Okay. Should you buy at the low, L, or should you buy at the high? L or high? Lump sum bid DCA. You're not wrong. You're not wrong. Okay. But this one is for ease of people who let's say you're very new, and after I talk about 20 strategy, you say, oh, forget it, I cannot. then you can do S&P 500 SPY. Okay, we all want to buy the lower, but we will never know, correct? So my suggestion is, right, every year you just take some money, just go and buy. Okay, buy when? Buy during your birthday. Okay, you all can type you don't need to type your birthday. Okay, you're still talking about TradingView, is it? Okay, so let me show you this. Guys. This one is a study. I like to do all the back testing. This is the all the data I crawl for the past 10 years. See, all the data. So there's some every single year, there's the highest, there's the lowest, right? There's the highest, there's the lowest. So I want to ask you this. Imagine every year you invest $2,000, but you don't know when is the high or low. Example, your birthday. Somehow, very interesting one. Your birthday is always the time where the stock market is the highest. you very interesting. Okay. Every time your birthday, you buy already, the market drop. Okay. Example. Let's see whether you make money or lose money. It's done by data. Data are very important. I don't like to just share without data. Now, let me show you this. If let's say you invest 2,000 every single year, okay, you will have invested, let's say 11 years, from 2013 to 2023, you have invested 22,000. Okay, look at this, guys. Now, let me ask you this. If you have always bought at the high, right, will you make money or lose money? You have me type M or L. M is make, L is lose. Make money. Okay, lose money. You see, S&P 500, the ETF right now is 548. Okay, 548, 549. I'm going to put into my Excel spreadsheet because I help you buy 548. Okay, 548. I help you buy every year at the highest. So if you buy at the highest, you get lesser units, right? 2,000, you buy the highest, you get certain amount of units. I just average it out, okay? So if you buy the high, your 22,000, let me show you this. 22,000 will turn into 55,000. So you will make about 9 point something % per year. This is if you buy at the worst case scenario every single year. But you must be very, very accurate to say every year I buy at the highest. So even if you have a super lousy investor, you still can make 9.78% every year. If you invest strongly and make 9.78%, is that considered okay or not? If it's good, how many type G? Long run will make because it will still go up. I'm not saying every year will make, but given time it will make. And this doesn't include 2% of dividends. You add it in, you may compound it at maybe about 11% per year. You tell me another instrument, you don't need to do anything, you can 11% and quite steady one. Then you don't buy the highest side, you buy average, you also can get 11 something percent. Okay, right now I'm measuring it when the stock market is quite high. If the stock market is low, this number will change a little bit. But I want to share with you guys, do invest, and S&P is quite solid one. But at the same time, I would love all of you guys to also master trading. Okay, so these are some gifts that I want to give you guys. Okay, wait. Before that, hang on a minute. Okay, before that, let me just give you guys the slides. Would you like to have the slides? If you all want to have the slides, type yes. Okay. 20th July. Let me send you guys a slide now. Then later I will email you also lah. So don't have to be too worried if let's say you never get the slides. Okay. Wait, how do I send the slides? Hang on a minute. I can send slides on, right? Oh, I dropped the file here, is it? Position. Oh. You all see whether can see or not? Can you all see? Wait, hang on. It is how to screen for stocks. This one you don't have to screen for all the stocks. When you start for like you just use S&P 500, you use gold, you use forex. Can you all see the slides? Is it inside the chat? Don't have. Okay, wait. I put into Dropbox. Give me a while. Okay. Give me a while. Okay. Or Telegram also can. Can see? You all click first. Okay, maybe you can give me your like can you like message me a way that I can contact you? You're also very interesting. Can see the Dropbox way. Okay, later I put inside the Telegram also. Okay, can. Hey, Kevin, is there a way that I can contact you? Can you like PM me? Okay, guys, I'm going to share a few things with you guys. This one is the final portion already. Okay, so how to master the trading that we have. So many trading systems. Then I send you guys a slide. So I think first of all, you all focus on one time frame first. Either 1 hour, 4 hour daily. Some of you are very chong, want to do 15 minutes. Also can. But remember the next thing is always remember to POT. Okay, this one I repeat a lot of times because I realize that seriously you will not understand what it means until you go through this one. Okay, wait. One a minute. Okay. Okay, then the next thing is this. Okay, so next thing is, okay, I got a special gift for all of you. Would you like to have a special gift on top of another gift? Okay, if you want to have a special gift, type G for special gift. So actually, I've been thinking through. I want to conduct a special training. This one is quite a few things happen together. I want to conduct a special training, and this training, right, I want to tell you, even trading, short-term trading, all this, I'm not the best. I'm really not the best. I don't really do a lot of short-term trading, but I have a lot of friends who are, and I have a lot of friends with a lot of powerful friends. So from July to September, I would like to actually conduct a special training. If you all want to join this special training, please type me. Okay, please type me. Okay, really, I'm not the best or the best, but I do a lot of position sizing all that. So now this special training, right, I want to share with you, there's a few modules. Number one, I'll get one guy to teach you guys what is market making. So I don't know whether you heard of Ken Griffin. He is actually one of the Citadel, one of the biggest portion. If you go and watch his interview, right, he mentioned that the market makers, right, are a very special group of people. They make money whether you win or lose. So I would like you all to learn all this. Would you all like to learn this? If you want to learn all this, help me type MM. MM stands for market making. So this is one of the modules that we'll be teaching you guys. It's not by me. I will get the CEO of some of the brokerages, right, to come and share with you all how to do it. Okay, so by the way, all these modules, everything that we put down here, it is 100% content. There will not be any selling, and all these people, they are really like big CEOs and stuff like that. Okay. Second portion, I will get a full-time trader plus a hedge fund manager to teach you day trading strategies. This one is not something that I do also, but this one is something that I saw a few of my friends, right? They every day can make like $100 to $1,000. So every day you just trade, make 100,000. That day not profitable close. So it's something that's quite powerful. For those, some of you may be good in this day trading. If you want to learn day trading, come type DT for day trading. So this one, these are all the dates. Later I'll send you guys. Okay, I'll show you guys how to actually get all this. So this is one of the fund managers we talked to. His name is called Matthew. He uses Go and G10, which is the top 10 Forex trading pairs to do this. He will actually be coming here, sharing with you guys some strategy, asking questions. Quite a number of them, they don't have public speaking experience. I mean, you say for me, I mean, I've been coaching, I've been training for quite some years. So I need you to also be a bit understanding, because a lot of them, they just spend their whole life trading. So they may not be able to explain things as clearly. They may use a lot of jargons. You got to be a little bit aware, but don't worry lah. We'll be there to facilitate also. Okay. But very cool, right? Learn from the hedge fund managers who manage $200 million. Okay. So the third module, right? This one will be taught by me. This one will be auto trading. Okay, this one auto trading, because a lot of y'all ask, hey, how do I do back testing? How do I auto trade? This one I'll be sharing with you guys. And one exciting portion is how to optimize it. So this one I want to share. It is part of my training that my quant traders is joining me. So every month we have a mastermind and all this. But this module, right? One of my friend is going to sponsor this module for you all to join. Okay, so you'll be sponsored. Okay, so meaning you say you can come in and then you can learn. And what is the purpose of us doing this, right? Is because when you go and backtest and when you find better scripts, we are hoping that two things happen. One is you share the script. Okay, I don't know whether you're okay with it. So when you find certain, wow, this method really very good. If you don't mind sharing within the community one, you can type S for sharing. So because we know that we can use computer, we can use a lot of things, but there's also limit one. If everybody come together, we test together, wow, I tell you, we will find out even better ways to make money, correct? Then the second thing is maybe some of you may consider joining us as our full-time investor portfolio manager. Okay, we are also looking for it now. Our fund is going to be up quite soon already. Okay, so optimization, all this, how to do MT4, all this software that we share with you, is all free one. Let me think. Yeah, it's all free one. So when you join the training, you will learn the full suite of exactly how all these quant traders do it. Okay, Ken? Now, then in the end, we'll tell you how to do auto trade. Go and click auto trade. I'm doing some auto trading myself, making quite good money. It's like sometimes I also feel a bit embarrassed. I don't know how to say lah. I feel embarrassed, like, wow, how come like the computer can help me make money like quite easy lah. I feel like never do work to make money like that. I don't know whether any of you all got this issue. Like you feel a bit embarrassed or feel a bit bad if you never put in effort and you make money. Anybody got an issue? For me, I feel like I sometimes got this issue lah. Okay, I feel like I should do more work to get more money. But well, it's working. We take the money, we give to people lah. Cannot. Okay. So it's quite funny. Then okay, the fourth module is called the perfect portfolio. This one, another fund manager will be coming in. Okay, forming portfolio is very important. We'll tell you guys. So I get quite a few big people who are managing millions. I'm hoping to get one or two that manage billions one. But they want a little bit harder, different time zone also. Okay, to come and teach also. Then okay, so the final thing is this. The exciting part is after all the training, you can see the training is from July to September, but the dates, right, is only until 31st July. Okay, this is something I want to do because I know that I wish that someone had done this for me when I first started out. I want to like get people to live trade together. So how many of you want to do live trading together? So it's not just learning is one thing, but really open an account, put in some money, then go and trade. Okay, this is the thing now. Okay, Ken? So okay, so I want to share with you, there's a bit of a criteria because quite a number of these fund managers and all that is sponsored by my friend, and the condition quite simple. So we will put you guys all into this Telegram group, and then we will actually, when we do live trading, we will do live trade together, and then we grow the money together lah. So okay, a few things. Okay, this thing will be 100% free. Okay, 100% free. How many of you love it? If you love it, type 100%. Okay. So a few conditions. Number one, no obligation. But once we make money together, we grow together, we give to people who are needy. So I'm going to put out this link. This one really up to you guys. Hey, I don't want you to feel obligated. I don't want you to like overgive. But this one is really children who don't even have schools and they don't even have a chance. So this is something that if you all find that is good, you all can also give this to this Classroom of Hope. So it's something that we aim to do. But I want to say this otherwise. If you got your own charity that you're supporting, go ahead and support your own charity. We are not trying to be, it's not a competition. It's not a competition. Okay, it's just really a practice to give also. The second portion is right. Hey, when we do all this live trading, can you all agree to take personal responsibility? So you cannot like come back and then blame and then say, hey, how come this one not working? How come lose money? Because we'll lose money. It's just that we will do the 2% stop loss. If you are okay, agreeable, help me type A agreeable. Take responsibility Cannot be, everything we also cannot. So okay. So this particular program, right? Okay. I don't want you to feel like obligated or things like that. So this particular program, quite a number of the fund managers we are pulling in, quite a lot of the trainings is sponsored by Monexa. Okay, so this one, how am I benefiting from it? I'm also still thinking. But the thing that I'm benefiting is he give me access to fund managers who is actually managing hundreds and 200s or millions of dollars. That's where we can link up together. So how to access the free training, right? Okay. So the free training, right, actually very, very simple. So what is going to happen is this. We have this thing called initially it's like a competition, but I also tell him actually I talk to people from Monexa. I say, hey, maybe people don't really want to compete in competition. Can we don't compete? Can we win together or not? How many of you love to win together? If you love to win together, type W. So I share with you what we bargain with them. So I managed to bargain with them now. So you can see, I tell them that, hey, can you sponsor more fund managers and more real life traders? Because they are a brokerage. Inside the brokerage, they can see who is winning and making money and who is not one. So those people who are making money, we are reaching out to them and say, is it okay you come and do some sharing, teach us some systems and things like that? And interestingly, some of them managed to do that. Okay. So what you need to do is this. Okay. I'm going to pass you guys the link. Okay. Later I share you guys. Okay. So once you go for here, right? Okay. The registration period, this one you don't need to worry too much. It's not about the competition already. We want to all learn together and then all make money together. And then after that, those who are interested to join the competition, we do live trading. Then those who get picked up, hey, you are very good in trading. Some of the fund managers may come and talk to you, see whether you want to trade their money, and some of you may get prizes. Okay, but it's not about that. If you are interested in competition, go ahead. But we want to train and master and live trade together. Okay, who wants that? Okay, PyScript. PyScript, hey, there's no PyScript. This one is an expert advisor. So all this is all on MT5 trading. Okay, once you go there, you can click register. So you click on this one, Alpha Trader. You just register now. This one, okay, this one basically, once you onboard, initially they have a few conditions. You must enter the competition. You must put in how much. I told him this. I told him, I said, hey, is it okay that we take away all these conditions? Then I say my birthday, then my followers, all this. Can we just allow all of them to come and join in for all the training? And if let's say after training they are comfortable, they will enter the competition because they also want to make this something quite grand. So I managed to get a waiver, but it's for this day lah. For I told them that Saturday I'm talking to them. When they enter, they just register. Can don't like force them must join competition, force them must put in deposit, how much or not. And then good news is all agreeable. Meaning you say it's 100% free. There's no strings attached on. All you need to do is to register. Then we will send you the links to join in the training. Is it good? Okay. So there's no strings attached. Okay. It's really a gift. Then later you all feel that, hey, really not bad. Let's join the competition or want to give to charity. Then we do together. Okay. I don't like to the only thing that I have the condition is you cannot blame us lah. Like we show live trading and all that. Can all agreeable? All okay? How many type ATC lah? This is called Alpha Trading Cup. It's an MBA that we put together for everybody. Okay, so let me show you a few things. Okay, so I'm going to put it inside this chat group again. Let me put okay, thanks a lot. Okay, here you all can, but this one you all must register today lah. So today register one, there's no conditions ready. I told him today is a special day lah. So sometimes I got birthday all this pull at people's heart. You all know I can be quite persuasive when I want to. So don't okay lah. So once you go inside there, once you register, they will ask you to join the Telegram group. So just join the Telegram group lah. Okay. The Telegram group, actually, I give you all shortcut lah. I give you all the Telegram group now. Should I do that? I really going all out to spoil the markets. Okay, so in this Telegram group, no, this is the chat. In this Telegram group, that's where we will talk about live trading together. Okay, Ken? Oh, sorry. One thing I want to share. So for some of the fund managers, when we invite them, they got request one thing. I want to be very upfront also. They got request, they say that, I can share a bit of my strategies here and there, but cannot be the proprietary one. Okay. No experience on this because no experience on this, don't worry. It is all the training. It's all about training. So I want to be very upfront. They did mention that if during their training session, when they share with you guys, is it okay they talk a little bit about their fund? So I told them it's okay lah, correct? I told them it's okay lah. Can So you all can just click here, go to the link, click register. It's totally for beginners. It's also okay because we will train you guys step by step. Okay. So the thing is to grow together now. Once you click inside there, they will ask you to join the Telegram group. Then they will ask you to open a account with Monexa. This one is just my appeal to you lah. If you all don't mind, you all just open an account with them because they are the ones sponsoring this. But you are not obligated to put any money in or things like that. But at least for courtesy's sake, you just open up, then that's it. Okay. So this the thing. Okay, can? So after that, there's the key thing that I want to share with you guys. Then after that, the exciting part that I want to do is to live trade together. When we live trade together, that's where we already learn a lot. Because all this for me, when I initially started, I read a lot of books, I attend a lot of lessons. Well, when it comes to live trade, I scared until also don't know how to move forward. So at least we do it together, we calculate the position size, then we can go together. If you all want, you all can fund depending on your comfort level. Okay, I explained a little bit. When you receive all these things, they will have some bonuses and things like that. You're going to read through. You're going to read through, and then you'll see whether it makes sense to you. Can? So that's all I wanted to share with you guys. For those who feel that you have benefited, do join this Alpha Trading MBA to come and learn together with us. Okay. Again, zero strings attached, nothing lah. It's just register. Then it's just that some of the fund managers may ask you, "Hey, you interested? Invest in my fund?" Then you'll consider whether you want or not. Other than that, we will try to find other traders and investors to come in and then trade together. So it will be until end of September. Then end of September, we aim to master this trading together. I want to set certain expectation, okay? Because I really do experience this before. The trading system, right? We can try quite a number of things, but in the end, right, all of us, we may get different result. It can be the same system, but different result. So I want you all to end off by typing POT again. POT. POT. Okay. Position size, optimize, and then we trade. Okay. Oh no, if let's say you already have the account, you have Monexa account and all that, then don't worry lah. You just register for this and then you just go through the process again. Okay, no problem. Don't need to open another account. Okay, can? So let me see what other questions you have. Algo trading. Okay, so for those quant trading one, right, it's a totally different thing. I'll brief you all again. But for the quant trading one, if you're in my quant trading mastermind, then I maybe will encourage you to join the competition because you are trained by some of the very top people lah. Correct. So this one, Alpha Trading Cup. I hope that this is something that benefit you guys. Anyway, 12 o'clock already. So let's go for lunch. I hope you all learn something. Recording, I'll send you guys. I'll send you through the email and also through the Telegram. So make sure you are in our Telegram group, the next level Telegram group. If you are not, then a little bit harder to communicate. Let me see. Okay. Oh, some of you very smart. Put your affiliate link. Okay, this is the Telegram group. Please join. Later, the slides, I'll put that in again. I'll put in the recording. I hope that I did not overwhelm you all with too many strategies. Out of the 20, aim for a few lah. Golden Cross. Go for the Japanese one. All very cute one. You can go and try. But the Japanese are very, very good traders. In case you all didn't know, you all can go and try all the Japanese names one. And then the Russian guy one, the NRT. Very, very interesting. But most of them, right, I realize different people, somehow something will click with you one. So you go and look through again, see which one works for you. Then we start to test together. Remember, POT. Start small, POT. So thanks a lot for spending this birthday session with me. I hope that you guys enjoy it. I'll see you guys around. And then, yeah, we continue to trade together. And then let's build wealth, give wealth. And together, let's go to the next level. All right. See you guys. Bye-bye.